Bank was included as part of the commercial banks in Rwanda. Don't get confused. And here also, this indicates that I&M Bank is working well since it holds a share capital in terms of total assets of 10%. And you can see on the pie chart here, 10% I&M Bank, it is indicated by the blue color. It holds 10% and it is in the first position, which shows that it is working well, it is still growing. And when we look at the net profit also, I&M Bank holds the fourth position after BPR. So again, on the capital adequacy ratio, you will see that I&M Bank has a capital adequacy ratio of 18.86%, which is above the minimum, which is required of 15%. So I think it is even okay, maybe a little bit more net non-performing loan ratio. It holds 3.62%. It holds 3.62%. So I think I can let my friends to continue. Thank you.
Okay, my name is Likwena Uziel First, representing Team A. According to their financial statements, we use the data from 2019 to 2023 third quarter. As it shows, their total asset is well increasing from 2019 to third quarter of 2023, and their net profit it's also increasing accordingly. And as it shows in the table, their total asset, it is included and it is shown in the graph. This is the bar chart that shows how their ratios is ranked. This is the cost to income ratio, which is operating expense over operating income. This is their liquidity coverage ratio, which shows it is well because its minimum percentage is 100%. That's their return on asset and return on equity. And this is about their market positioning, their customer deposit and customer loans. As it is indicated on the graph, on the line graph, it is also well progressive. It is increasing accordingly. This is to the valuation.
Good morning. My name is Jimin Shimiman. Let's proceed about valuation of I&M Bank. Our valuation is a relative valuation where we used price to earning ratio and the price to book ratio. As this table shows, we have all the information to calculate price to earning ratio where we have the current stock price for each listed banks, IML, Bank of Kigali, Equity, and KCB. Stock price listed, which gives price to earning ratio of 9.6 times to IML and 5.2 times to BK and 5.5 to Equity and KCB Kenya 4.8, which gives average of 7.2 times, and it gives the target price of 29.48% by average times the earning per share of I&M Bank. By to price to book ratio, we have the average of 0.
1 minute left.
Percent, which gives a target price of 44.62. And if we calculate the target price, it is to take average for price to earning and price to book, which gives 37 as a target price, representing 70.7% 80% reduction. Thank you.
Thank you for the last point about the SG, which stands for environmental, social, and the corporate governance. The environmental, it is concerned with how the I&M Bank impact on the environment changes, like climate changes, and social stand for how the I&M Bank that partner with the societies in the operation for the
Time up.
Oh, thanks so much.
Team A, thank you for your presentation. I just have a small question. In the beginning of your presentation, you say that your recommendation was to hold the stock. In the last table, there is a recommendation to buy. So I just wanted you to give some clarity around that. It's a mistake.
Since the price is below stock price, we can't recommend the people to buy. It means they can either sell or hold, but we choose to hold as we have seen that the bank is still performing where there is a change that there is a change that earning per share will increase, and also the price of the shares can increase in a future period. That's why we recommend them to hold their current stock in a I&M bank. Thank you.
Good morning, and Team A, and thank you for a very informative presentation. I have two questions. The first one is on the rating of the stock. So please give the circumstances in which you determine whether a stock is a buy, hold, or sell. So you gave it a hold rating, so what was your criteria for that? But if you can also walk me through in what circumstances will it be a sell, and in what circumstances will it be a buy? That's the first question. And then the second question is, you've correctly highlighted that I&M has improved in performance across a number of metrics. If you could please give some context on how I&M has performed vis-a-vis their peers in the industry over the period with which you reviewed the stock. Thank you.
Yes, thank you. Starting for the question relating to valuation, a recommendation to say, I recommend to say if the stock price, current stock price is above the target price, because it shows the potential loss in the future. Stock holders may have feared that they will lose the value in the future, and they mitigate that risk by selling their shares. And we recommend to buy if the current stock price is lower than the target price, indicating that the share, the value of their stock is keep increasing, which is good to them. They can buy more shares in the bank, but we can recommend to hold even if the target price is greater than the current stock price. if there is a factors that shows the bank in the future will keep performing well, because it can performing not too good because of some factors like market conditions, COVID-19 or other pandemic pandemic disease. But if there is a chance that the things will go light, we can recommend them to hold their current shares, not to buy other notes. Thank you. Other can continue for the second question.
That's the second question. Can you please repeat the second question? If, so we were Andem Bank analysis that was reviewed in Andem Bank analysis, and according to the recent views, it shows that Andem Bank is much better performing as compared to its peers. For example, when you come to the we have compared the quarters of we have compared for the year 2019, 2020, and 2021 versus including 2022, but we also included the quarter. Don't be mistaken. This is a quarter of September, quarter 3, 2023, which was present. Andem Bank, you will see that Andem Bank has been increasing in on its return on assets, where it has showed that return on asset, it is how well the company is using its assets to get profit at the end of the operating year. So we see that here it was operating to at a rate of 1.97%, and it was operating at it got a return on asset of 1.39, but here it increased in 2020, and there is also the for the quarter 3, which is the yes. So no, as compared to the industry, they are doing as they are doing. They are doing some. They are doing. They are doing better than the industry. Though when you come to the industry, you'll find that the industry is operating well generally, and the Andem Bank meets the requirements of the National Bank of Rwanda, and it also its return on asset has. I mean, its operating ratio, its ratios show that it is operating well as compared to the industry. Let me have my friends to support me.
As you see on this pie chart, when comparing among all commercial banks, the Andem Bank, in terms of total asset, hold the 4th position after Equity Bank. But as you see on this pie chart of net profit, Andem Bank also have market share of 60%, which gives it 4th position among all of the commercial bank in Rwanda. That's why we found that Andem Bank is performing aware among all commercial banks in the industry. After BK, BPR, and Equity, the 4th position. For the industry. Yes. They have to improve their activity to increase their profit. As you see for the BK in terms of asset has 45% of total commercial bank. There is a difference between BK and the INM. INM must improve their activities to increase their profitability in future periods. Thank you.
Hello. Thank you, Team A, for your presentation. I have just quick questions. I know the 5 minutes are almost over. I noted that your industry analysis, you used figures, the June figures, and then in your valuation and later in your financial analysis, you used this September figure. Why is that? Why did you choose to use separate numbers? And second one, I know your time was up when you were yet to complete on ESG, but did you have time to review the quality of the management team in place and the executive, both at the board level?
Thank you for this opportunity to come back about the corporate governance. Yes, as you see, the corporate governance of I&M Bank has 9 directors made up board, including 1 executive director, 2 nominee non-executive director, 6 independent. The chairman of board of directors is Bonaventure Nivis. Benjamin Mutimura is the manager director, and Nikihira is a chairman of audit committee. This is the board of directors of I&M Bank. And as they are structured, they are working each other to achieve the goals of I&M Bank. What they have achieved, like during the 2021, in October, the bank launched 3 new credit cards on market, including MasterCard business credit card for small medium enterprises, and MasterCard for corporate credit cards and wide elite credit cards. Again, for another achievement is the bank recognized as the winner of financial reporting by ICPAL. During 2022 in March, also the bank was once again recognized as the winner of financial reporting by ICPAL among the public listed and group companies. This is the indication that the governance or the board of directors are working well, and they're working ethically to collaborate with they're working professional and ethically to collaborate with the community. Thank you.
For another question you have asked about the criteria of data. For comparing commercial bank in Rwanda, we have used the information reported by BNL in its annual report, which will become easier for us to compare, or for the industry, we use the information reported by BNL for its annual report. But for the valuation, we use the current data or we use the current data of 2023. That's why. Thank you.
Thank you, Team A. Just a general question. So you're comparing, you're giving a recommendation, but as you're giving a recommendation looking at the financial statements from the bank, I would also want to understand what is driving, what are some of the elements that are driving the price of I&M Bank on the Rwanda Stock Exchange? The elements, what is driving according to you, because I assume this is a listed company and you're recommending a buy, a hold, or a sell. So what are some of the elements that you've seen that are driving the pricing on the Rwanda Stock Exchange of this company?
Yes, yes. We've seen also for I&M, we've seen that it's their investment activities, their net profit, and their social responsibility are thought that what drives their price to get high.
As you see, there is a strong employee engagement of I&M Bank, which leads to persistent increase in the profit of I&M Bank year to year. The customers are satisfied. The I&M Bank is the best business in Rwanda for business, especially micro, small, medium enterprises. The I&M Bank is the best for them. The profit is keep increasing, the total asset is keep increasing, which can attract other people to buy shares in I&M Bank. If many people are demanding shares in I&M Bank, the price of I&M Bank on the Rwanda Stock Exchange will increase. Thank you. The price is undervalued since the current stock price is above the target price. Oh, sorry, the stock is overvalued. Thank you.
Thank you, Team A. Now you can sit. We now invite, sorry. We are now inviting Team B to come and present.
Good morning, we are Team B. We are here to present about I&M Bank Rwanda giving a recommendation of buy, whereby the market price of equity shares is 45 Rwandan francs as of February 23rd, 2024. As a team, we analyzed that the market price is projected to increase. The investment summary covers the main point that we're going to be talking about this presentation. The first point is we're going to be talking about the financial performance of I&M Bank Rwanda and how it managed to keep its economic stability during the COVID-19. The second point, we're going to talk about the strategic expansion on digital banking. The third point is I&M Bank Rwanda dedication to sustainability through engagement in initiatives supporting SDGs varying from housing and education. The next point is I&M Bank Rwanda overview. I&M Bank Rwanda was founded in 1963. It is headquartered in Kigali. It is listed in Rwanda Stock Exchange. It has 78,300 customers, 17 branches, 38 ATMs. It is led by CEO Benjamin Mutimura, was previously called Banque Commerciale du Rwanda, which transitioned to I&M Bank Rwanda in 2012. The parent company is I&M Bank Group PLC, Nairobi-based. The third slide is the future of I&M Bank Rwanda. It focuses on 3 points. The customers, whereby 78% of transactions are now being online. The second point is its financial performance, where it's extended its services through debit and credit card services in order to access to different customer base. It had also in 2021 the spend platform, whereby it gained 4,517 new users. The third point is boosting employee engagement by making sure they work in a safe environment. The fourth is industry overview, which here, as you see, there is a chart which provides an overview of the banking industry, specifically focusing on commercial banks listed on Rwanda Stock Exchange. The rankings will be based on the capital strength. The first one is Bank of Kigali with 23.80%. The second is 17.71%, which is I&M Bank. The third is Equity Bank with 14.90%, and KCB. As you see, the I&M Bank Rwanda is second. Let me welcome my colleague. Thank you.
Thank you very much. My name is Jean-Paul, part of Team B. So this is the STG, specifically I&M use to make investment in construction, where it partnered with BRD in housing. The next one is pilot phasing, where they just supporting financing students to get school fees. They also help small and medium businesses to grow, whereby they just worked with 9,000 small businesses. This is the structure for shareholding, whereby BCR hold 54%, African investment hold 24%. This is environmental, social, and governance aspect for this bank. Specifically, they just invest in environmental pattern by where they build a good office, which is environmental friendly. They also support small businesses, as I said. Then they support privacy policies and other government support. Thank you.
Good morning, my name is Ketia, and I'm mainly going to focus on the liquidity, assets, and profit for I&M Bank. As you can see, there was a percentage increase of 7% based on the year of 2022. There was an increase of approximately 10.9 billion Rwandan francs. Mainly, the profit came from the net interest income, which increased by 6% year on year. There was also an increase of 17% year on year from the fees and commissions, which mainly focused on the digital portfolio of I&M Bank, and 75% of that profit came from the Forex,
which has 6.4 billion Rwandan francs. The assets of I&M Bank as of 30th September 2023 increased on 14%, which is approximately 558.5 billion Rwandan francs. And then about the liquidity coverage ratio, they had 206%, which is far greater than 100%, and this is a high portion, and it is positive because according to the Central Monetary Bank of Rwanda, they say that at least a bank have to have 100%, which means that the bank will be able to cover its short-term obligations for at least 30 days. And then if I&M Bank have 206, it means that they will be able to survive for at least 60 days. And the total assets over the past 4 years, as I said, it increased over 14% Rwandan francs from fiscal year 2022, whereby they had 491.3 Rwandan francs, and then they increased on 14% to 558.5 Rwandan francs. And then for the Q3 before tax profit for the past 4 years, most of us know that in COVID-19 recovery, I&M Bank wasn't highly affected because they were able to implement policies and strategies which allowed them to continue operating even after the COVID-19. So as you can see, they continued to rise from 2020 to 2021. And then as of 2022 and 2023, there was a percentage increase of 7% of the profit, which came to 10.4 billion Rwandan francs. And as of quarterly before tax profit for 2023, after carrying out the research, we found that as of quarter 23, they had 10.9 billion Rwandan francs. But after using the vertical increase profit, and we assumed that the quarterly profit increase follows the normal distribution data, we were able to predict that in quarter 4, they will have 14.7 billion Rwandan francs increase. Let me allow my colleague to proceed.
Good morning, honorable judges. My name is Frank Chimenyi, and I am part of Team B. We proceed with our financial analysis. This is about I&M Bank Rwanda's return on equity and its return on assets. So in our analysis, we found that for the past 3 years, I&M Bank's return on equity and its return on asset remained relatively the same. But for return on equity, it was high, so it is desirable. But our analysis also indicated that I&M Bank, there still remains a room for improvement for I&M Bank, especially about I&M Bank's return on asset. So you can see that for the past 3 years, the return on equity remained relatively 9.6, 9.5, which shows that I&M Bank is good at efficient utilization of the equity or the investment from its investors or shareholders. So this is about capital adequacy ratio. So we wanted to evaluate the adequacy of I&M Bank's capital to see whether I&M Bank has the capital which can sustain or can absorb any unexpected loss. So we found that its capital adequacy ratio for the past 3 years remained above the 15 minimum requirement.
Time up.
Can I have 1 minute more? 1 more minute, please. Please. Let me go to the conclusion so we made a buy recommendation to the investors, and we encouraged investors to buy the public to buy shares in I&M Bank Rwanda because of its high return on equity, its high capital adequacy ratio, which ensures financial security and high liquidity ratios, its high profitability performance in terms of profit, which is projected to 14.7 billion Rwandan francs, and it's reasonable and declining cost-to-income ratios, which means that the I&M Bank will be able to make high profit out of minimum investment in the next years. But we made sure that we can give some points to consider to the investors. They should closely monitor high debt ratio in order to make that sure that their investments are not going to be used to pay for the loans in terms of any case the I&M Bank runs default on its loan when the interest rate rises from the lenders. So also the investors should closely monitor the interest rate to make sure that their investments are not going to be used to pay for the loans. And they should also try to reduce their operating expenses, because the year-on-year increase for the operating expenses increased by 25%. Thank you.
Thank you. I have one question. Your recommendation is a buy. I want to know, according to your valuation, what is the intrinsic value of the share price of I&M? And I want to know if you compared it with the current price before recommending the buy of the share.
You said the interest, I did not get the first one quite well.
What is the intrinsic value of I&M share according to your valuation? Then if you compared it with the current price before making a recommendation.
Yes. So we found that in the report that we made, we projected the intrinsic value to be 55 Rwandan francs, and the current value was 40. As of 22nd February, according to Rwanda Stock Exchange, it was 45 per share of I&M Bank Rwanda, and we found that there will be about 10 upside in the equity price. Thank you.
Thank you. I have two questions.
Yes.
First one, which valuation method did you use to value the stock? Which valuation method did you use? Second question, you are showing profitability ratios, return on equity 9.6%. Did you compare these ratios with other banks? And for you to assess where I&M stands compared to the competition? And if you take 9.6% ROE, and you compare it, for example, with a government paper that gives you like 11%. If you are a shareholder, would you invest in I&M? How would you compare a return on equity of 9.6 with a government bond that gives you 11 plus?
Thank you. The first question, I think there are three questions, and I don't remember.
The valuation method.
The valuation method. So to make evaluation, we used the data that we got from I&M Bank Rwanda website and the presentation we had with them. Then we compiled the data, we did the calculations, then we projected the target price. But for the market price, we found it on the website of Rwanda Stock Exchange and the Rwanda Central Bank. And the second question was about, do you mind?
The profitability ratios of I&M Bank. Let's talk about just the ROE, 9.6%.
Yes.
Did you compare it with other banks?
Yes.
And how do you think it's a very good ratio?
Yes. So this return on equity, we tried it to compare with the other banks, like Bank of Kigali, Equity Bank, as one of leading banks in this Rwandan industry. Then we found that I&M Bank is one of good performing banks in terms of returning on equity. So I think even though it is not desirable, but I would still invest and improvise policies to make it work more better.
Thank you. Thank you, Team B.
Welcome.
I have a few questions. One, when you are making your industry analysis, I didn't see the timing, what data did you use as of when? And could you also confirm, because you said you compare the share price as of Feb, you just confirmed that. I've also seen, so that's one. Second, I've seen part of the increase in profit for I&M last year. You mentioned there was an increase of about 75% in Forex earnings. Was that, do you think as a team that's something sustainable? Is this something that you will, in your projection you've used that could, indicate future performance for the bank? Thirdly, can you confirm whether, I don't think we haven't seen all your presentation, but can you confirm whether you've done a sensitivity analysis for the bank before your recommendation? Thank you.
Thank you. There are three questions. I start with the one of Forex. That 75 increase in the Forex, we do not think that it is sustainable because Forex involves too much risks. And what we recommend the bank is to closely monitor the currency fluctuations in terms of foreign exchanges, because when they put much investment in the Forex and at some time the currency that they have, they are going to sell, decreases in value, they can end up falling into losses. So it is not sustainable, and that's why we recommend the bank to keep an eye on it so that they know how to regulate it. And the other question is about? That will continue to be profitable. Yes, sure. Because first of all, I&M Bank increased its digital portfolio, and these things of Forex, they also go hand in hand with the digital transaction. So we think that as everything about technology, as even the tourism industry in Rwanda grows, so many people, they need that money exchange in Rwanda. They also increase. That's why we think that this Forex investment is going to be sustainable in the next years. And the other question, please.
The other question was, wanted you to confirm whether you've done any sensitivity analysis for the bank.
Yes, we did.
So I saw that on your slide, presenting on the ESGs.
SDGs.
Yes, SDGs. It was very well presented, but I would love you to link that with your valuation and also on the share price on the Rwanda Stock Exchange.
Here,
yes.
on this slide.
Yes. So it's very well presented,
yes,
and very on point, but how does it link? How did you use that data in your valuation, but
yes,
also how do you think it influences the share price? And also you can feel free to give some of your colleagues
sure,
the mic.
Yeah.
So thank you. I&M, first of all, the companies use what you call corporate social responsibility. There is the tool of profitability. So according to the valuation, we found that I&M Bank use specifically for this partnership with BRD will lead to long-term sustainability of bank through this long-term project? Thank you.
Thank you guys for a great presentation. I particularly like the fact that you had investment thesis and covered investment risks at the end. My question is one based on financials. If you could give a few reasons why in Q3 the growth in assets was, rather the growth in profitability was lower than the growth in assets. What could be driving this? If you could give 2 or 3 reasons. They could be conceptual if you hadn't done that level of analysis.
Yeah, thank you. The reason why of the reduction in profitability, it is because the bank is making more investment in digital, because N&M is digitalizing their operation. So I don't know if my colleague can make some addition.
Your comment. So if they're investing more in digitization, what would you expect to happen?
First of all, in nowadays, the world is somehow being modernized or based on
just in terms of costs. So cost. You know, bank, they lend, they get interest income, they collect deposits, they get interest expense, they charge for various services, they have staff, they pay salaries, they have office, they have branches, they pay rent, they have systems, they pay IT cost. So how do you link your comment on digitization with a lower growth in profit vis-a-vis the growth in assets?
So in short run, this will minimize the level of profit, but after the given time, will lead to high profit.
Thank you. I would like to add another cause of high increase in assets, but with minimal increase in profit. Apart from digitalization of its operation, I&M Bank also provided too much loans and advances to their clients. And in the financial analysis, loans and advances are considered in the asset categories, which means that the more bank gives the more loans, it is increasing its assets because it is giving money to other people who own its money. And we did that in the last slide. We had the problem of time. We did that in the last slide. This slide shows that an increase in loans and advances was 18%, with 3 units more than the increase in the customer's deposit, where customer's deposit increased by only 15%, while the loans and advances increased by 18%, therefore increasing its asset. Thank you.
Thank you, Team B. You can now go in your seat. We are now inviting Team C to come and present.
All right, so good morning. My name is Moise Irakoze, and I'm here with Team C. We'll be looking at the financial performance of I&M Bank Rwanda PLC, and we look at the overall recommendations of whether we would recommend people to invest into the bank or not, depending on what we'll be looking through. So to start with, the bank started operating in Rwanda in 1963, and that makes it the oldest bank in Rwanda, and it has its headquarters located in Kigali city with a very nice environmentally friendly building. And yeah, so to move forward, this is the outline of the presentation. We'll be going through the background of the bank, the financial analysis, valuation, and the environmental, social, and governance impact the bank has. So the bank is ranked among the top 3 banks in Rwanda, and it follows Bank of Kigali, BPR Bank, and I&M Bank Rwanda is the 3rd one. So I will welcome the next person to go next and introduce us to the financial analysis part.
Okay, thank you so much. My name is Francois Dukunda, and I'm going to talk about financial analysis of I&M Bank Rwanda. And I&M Bank Rwanda has demonstrated good performance financially, and by starting to 2019 up to 2020, the bank has demonstrated outstanding return on equity and return on asset. It means that the bank has been able to generate good profit to the investment of the shareholders, and for the money the bank invested in, it has been able to make a good money. However, in 2020, the bank dropped down to the return on equity 10%, and it is common to all of the world due to the pandemic COVID-19. And currently now, the bank, as you can see on the graph, it is in recovery mode where it boosted its profit generated from the investment of the shareholders and even for the money it spent. Talking about 2 recent year, 2023 Q3, as you can see the return on equity, the bank has been able to increase its return on equity up to 12.89%, and return on asset has been also increased up to 1.70%. This is good standing where the bank can be able to generate profit of the investment of the shareholders, and even the money it spent, it has been able to generate some money. So as currently on the 2023, I would like to talk about some other ratios and even some quarters of financial performance. The bank has been able to perform well in income statement where the profit before tax was increased up to 7% year on year. It means that by comparing the last year up to the current year, the bank has been able to increase its profit before tax, and the net interest income has been also increased up to 6%. And when we see to the balance sheet of the bank, it has been able to increase its total asset up to 14% year on year, and even the total deposit of the bank has been able to increase up to 15%. Specifically, when we look up to the key ratios of the bank, we have talked to the non-performing loans and even cost to income ratio, where the bank has reduced its, yes, it is updated the PPT, that's why I was noted it. Okay, thank you so much. For these ratios, the bank has been reduced its non-performing loan up to 3.4%. It means that the money borrowers take from the bank has been, and the risk to bring it back on the principal monthly has been reduced up to 3.4%, and even the cost to income. It means that the income, 65.3% of income the bank has been able to be spent in the operating expenses of the bank. So when looking to the competitiveness of the bank, we wanted to compare with the equity bank, where, as Moses said, that the I&M Bank is oldest company, which is started in 1963, yet the equity started in 2011. And even when you see the values of the I&M is customer centricity, they put ahead the customer. So when you give more value to the customer, it's the more they love the company, yet the equity is socio-economic driven. And then the asset, the I&M Bank, as of 2022, it is 491.3 billion Rwandan francs, yet the equity is 63.24 billion Rwandan francs. So let's see the reading company, how the I&M Bank stay reading and evaluation. Thank you.
Thank you. I'm Eladukunda Elise, and I'm going to talk more about the evaluation of the I&M Bank Rwanda. So starting with the price to earning ratio, this is the ratio that shows the market price to the earning per market share. So I&M Rwanda has a 7.3 price to earning ratio, which is greater than the price to earning ratio of Bank of Kigali, as Bank of Kigali has 4.9 price to earning ratio, and this shows that I&M Rwanda is a fertile land, as investors can get more than they could invest in Bank of Kigali. Continuing with the price per book value, this considers how the stock is valued to the book value of its assets. So usually the price per book value is less than 1, but as you see, I&M Bank Rwanda and Bank of Kigali, they both have the price per book value which is less than 1, but you can see that I&M Bank Rwanda has a price per book value which is 0.63, which is less than the one of Bank of Kigali, and this may show that the asset of the company might be undervalued, and if they are sold, the market share can be more than it is exposed now. Continuing with the internal rate of return, I&M Rwanda shows that it has an internal rate of return of 19%, and this is the rate that shows the possible profitability of the potential investors. So this shows that I&M Bank Rwanda is the fertile land, as the potential investments show that it can get profitability of 19%. Thank you.
All right, so thank you very much, Elise, for the information. So among all the services the bank provides, either offering credit or debit cards, providing loans and others, we can see a promising investment that can actually be done in the bank. And did you know that according to the report published by the National Bank of Rwanda in 2021, the loan applications increased by 14.5%, and in the year that had started before, of 2020, it had actually reduced by 10.5%. So you show that in the economic recovery, I&M Bank Rwanda also took a stage in that, and we know that banks make money from providing loans and all that. So it shows a promising economic recovery, and actually investing in the bank would be the best fit. So let's look at the environmental, social, and governance impact the bank has to the society.
Good morning once again. My name is Deborah, and we are going to look at the environmental, social, and governance impact that I&M Bank has to the country, as we are talking about the I&M Bank Rwanda PRC. On the environmental impact, I would like to focus on deforestation and waste reduction. I&M Bank puts strong emphasis on environmental well-being, or the natural world that we deserve, where in the reforestation they have participated in the Umuganda, special Umuganda that took place in Bugesera, where they partnered with United Nations to contribute to the natural world that we deserve in the country, which was where they have the purpose of promoting green touch in our country. On the waste reduction, they mostly do electronic waste removal or recycling, where they partnered with electrical equipment company, which recycle those electronic wastes instead of being around in the environment. And on the social, I would like to talk about education support and gender diversity. On the education support, I&M Bank has supported children in COVID-19 through the initiative of NGO called Book Mobile, where they contributed 45 million to that company to help the children to love the storytelling and reading in the campaign called Read Aloud. And on the gender diversity, as you know, they give opportunities to both women and men, where they have all the workers, they have men and women, and also they give equal access to the opportunities and the right to both gender. On the governance, I would like to talk about the transparent. I&M Bank has a transparent. As you know, its information is published online. Everyone is able to look at the information about I&M Bank and can get more information that the person wants. And also on its transparent, it gives they fight against corruption, and also they have developed the mobile banking where everyone is able to open account to manage the finance that the person have. So moving forward, I would like to.
Time up.
All right, thank you so much for your time. And yeah, this was our team. So we are welcome to any questions around our presentation. Thank you very much.
Thank you, Team C. Maybe you can just quickly go through your valuation and then your recommendation before we even continue with the rest of the questions.
All right, so
quickly, eh?
I will welcome my fellow to support on the valuation part.
You need a summary about the valuation. Oh,
yeah,
considering
evaluation and then recommendation.
Okay. Considering the ratios and the performance shown about I&M Rwanda, I&M Bank Rwanda, this shows that the bank has a high value comparing to the leading bank of Kigali. So I would recommend investors, if they would like to buy shares, they will come and buy shares in I&M Bank Rwanda. Thank you.
So what I can add on, as we have seen through the environmental, social, and governance they do, even in those campaigns, they market their services and they can get other investors from that. Through doing that, it shows that they have great concern on the well-being of people. That's why I would encourage people to invest.
Quickly on the valuation part, we saw that the price to earnings, I&M has 7.6, yet the BK has 7.3, yet the BK is below the price to earning. So that means that per the share invested in I&M, person can get more compared to the BK. So when you talk about to price per book value, the I&M has little. Let me go. Okay. Okay, cool. So price per book value, I&M has 0.63, yet the BK has the 0.82. It means that the people can, because the BK has a book value which is higher than the I&M, people can get more compared to the I&M. But when you come to the price to earning, per the share invested in, people still they can get more compared to the BK. So we would like to see people buying share to the I&M because they can earn more than the BK. Thank you.
Well, so let me continue my questions. One, were you able to arrive at a computed or intrinsic value of the bank? If you can tell us what price did you find, and how does that compare to the current market price? One. Two is we didn't see any industry analysis in your presentation at the start. Was it a voluntary decision to skip that? And then why did we compare? In most of the cases we've seen I&M be compared to only BK and equity. Why is that choice? Do you consider those two the most fierce competitors of I&M, or there's any other reason behind that?
Well, before giving my colleague a read, I would like to talk about the reason why we took equity and even BK. Most of the time, when you are going to compare something, you compare yourself to the person who's reading you and the person who's behind you to see where you stand. So we took equity, and we know that I&M Bank is top 3 to the commercial bank in Rwanda. The first one is BK, the second BPR, and we have I&M at the second. And we took the equity because recently it has made a very good partnership with Coach Bank, then it means that we have to make analysis before and see the standing of I&M. And here, that's what we did. We took the asset of the I&M and compared to the asset of the equity. Then when this is the behind commercial bank. But when we go to valuation, we took BK because it is leading to see what can need to be done in our company compared to the leading company in the commercial bank.
Yeah, thank you, Francois. Actually, yeah, that's it. The main reason we went with Bank of Kigali is the first bank. As I mentioned, I&M Bank Rwanda is ranked the third. So we needed to go with the main competitor, and we see like how far we can improve actually to make now I&M Bank keep penetrating through the banking sector in Rwanda and reach the top. And equity was also considered. We are, I hope you are all aware of the merger that is taking place, and you know, as the bank merges with another one, the footage increases. There are many branches and many services, like it increases. So that's why we went with those top banks to compare it with I&M Bank and actually show where I&M Bank could step up and, you know, penetrate through the market. And going to your question, the first one of whether we might have left the industrial analysis intentionally. Yeah, given the presentation time limit, where like we could, you know, cover this through the first and second slides, but without necessarily like having to present it as it would be there. Yeah, thank you. Any other? Oh, so for the pricing, it wasn't actually, we didn't manage to reach it either through the mentors or the website. We tried to look at the stock exchange market, but it wasn't present. So we decided to move on with the data that we could manage to access and go on with their evaluations.
Okay. Yeah. I have two questions. The first one is we did not get the financial analysis aspect in your presentation. I would like to know about the prudential norms. If I&M is complying with them, what is the position of I&M about the liquidity, the solvency, the quality of their loan portfolio? And the second one, you said the recommendation is to buy, okay? And according to the question asked by my colleague, you said you did not reach the price of the share of I&M. You looked for it on the stock exchange, even on the website, did not get it. How did you recommend someone to buy without comparing your result with the current price of I&M?
All right, so before I pass on the ball to my colleague, we know through the recommendations, there was a recommendation of buying, but also a recommendation of investing into the bank. So you can invest into the bank. Well, if you're not educated about the current price, yet you could base on its progress. If you can check on the return on equity and return on asset, you can see that actually my one share will contribute this amount compared to another share maybe I would be making into another bank, and that's why we recommended that there could be investing into the bank and not necessarily like having to buy it, but buying shares into it because of the health of the investments that might be there. So maybe you can move on to give now the deep financial analysis of the project.
Maybe just before we move on, can you tell us what is the difference between buying shares and investing in the bank?
It's the same.
So maybe I didn't understand your comment. You said you can invest in the bank without necessarily?
selling the shares.
Selling.
Yes.
How can you invest in the bank without selling? Just expound. Clarify.
Oh, so there is the side of the bank and the side of the investor. So if you want to invest, obviously you'll be buying shares in that bank, but you won't be the one selling them. So it's now on the side of the bank actually selling the shares to you. Yeah.
How if I am an investor, where would and I want to buy, where will I find the shares of I&M?
All right. So
You can find the shares on Rwanda Stock Exchange.
At what price?
Currently, I&M has 292 per share. 200. I&M has 43, and BK is 292. Yes, yes. Yeah.
You know, I work for BK Group, so I was going to I was going to say that 292 sounds like the price of BK Group a few weeks ago. It's 300 franc now. Thank you for the presentation. I particularly enjoyed your overview of ESG. The one thing that I want to point out is please relook at the ratios you've calculated. I have a fair idea of what the ROE and ROAs are for I&M. Those look quite different from my limited knowledge. But maybe you can tell me, how did you calculate ROE? Just conceptually. That's number one. And then number two, and really building on my co-judge's point, why did you limit the analysis to just one bank? Why didn't you look at other banks? I know there's time, but in terms of building a thesis, why did you limit it to that? And if you did look at other bank performance, you could just give us a few comments, which may not have been in the presentation, but was part of the analysis you did as a research team.
Well, thank you. I say this, our philosophy to take BK, we know that BK is a reading company in the commercial bank. So if we want to compare ourselves, we want to compare to the reading company and see what can we do, where is our gap to go there. It doesn't mean that we didn't tackle other banks and report detailed, but due to the interest of time and the slide, so we want to present now at BK, how is it looking like, and the BK is reading to us. So we can calculate the price to earning and even price per book value. Going to the calculation of LOE and LOA, LOE we calculated, we took like the equity or book value of the I&M back to the net interest income, and return on asset, we took like the total asset of the bank to the net income. Yes, net interest income.
Okay, thank you.
You're welcome.
So maybe you will need to review the way you calculated the ratios, because the formula is not exactly correct. It's the return, it's the profitability divided by the equity instead of the other way around. So finding a ratio of 51% ROE when someone sees it, it shows exactly immediately that there is an issue in the way you calculate it. So my question is just around the prudential ratios, because my colleague asked that you did not have the opportunity maybe to expand on it. But if you look at some of the ratios that the central bank requires for banks, let's talk about maybe the asset quality. What was your judgment on the asset quality of I&M Bank? You can pick one ratio and present, just for you to have the opportunity to gain more points.
If we take one ratio, I would like to take the internal rate of return. So considering the risk-free rate of Rwanda to be 7%, and we know that the risk-free rate is the profitability of the the investment when the investment shows the zero risks. So if it is 7% and the internal rate of return of the bank is 19, this shows that the bank is performing and it can be a fertile place to invest in.
Okay, that's the earnings. The asset quality, like when I&M lends to their clients, do they have performing loans? Do they have non-performing loans? The ratio about that, it's what I mean about asset quality.
Okay, we really yesterday we asked whether they can share the updated PPT. We saw that the I&M has non-performing loans ratio, which is 3.7. So it's something good that can show that bank is performing well. In
why? 3% is good, why?
3% because...
compared to what?
The more these non-performing loans increases, that's the problem. Because the borrowers, when they took money and they cannot be able to bring it back to pay the principal monthly, that's very questioning. So the bank has reduced year on year 3.4%, which is very good, showing that the borrowers can be able to pay the principal of the money they took from the bank.
Thank you, Team D. C. Now you have your seat. Have your seat. We can now invite Team D to come and present.
Good morning, ladies and gentlemen. I would like to first welcome you to our presentation. So we are Team E, and we're going to first Team E. Oh, sorry, we are Team D. Yeah, we are Team D, sorry. So I'm going to first delve into a brief overview of I&M Bank before providing our recommendation and what we based on while making the recommendation. So as you can see, I&M Bank was the first bank that was established in Rwanda, May 25th, 1963. So far it's been 61 years the bank operating. It demonstrates its experience. In addition, the bank was renamed I&M Bank in 2013. It was first called BCR, Banque Commerciale du Rwanda, and its IP, it first sold its shares in 2017. And the first introduced services of the bank was leasing financing, on mortgage loans, as well as online banking. So moving forward, Here there is an investment highlight we base on to make a recommendation of buying shares in I&M Bank. First and foremost, there we can see the finance. A pre-tax profit of 13.4 billion was made in 2022, where in the previous year it was 10.9 billion. So this shows the dramatic increase in the pre-tax profit made by the bank. Moving forward on technology, you can see that 20% increase in fees and commission due to transition to digital platforms. So the bank started to use digital platforms and 20% increased in fees. So on risk management, 9.3 billion profit after taxes. So you can see that this profit was made in 2020, where there was different challenges such as COVID-19 challenge, but the bank were able to keep performing well. So shareholder value, dividends per share increased by 55% in 2022. So this demonstrates how the bank is strong, which is why we made a recommendation to buy shares. So on this slide, you can see that there are digital innovation, like it was the first bank to introduce electronic banking. So as I mentioned above, it was the first bank to be created in Rwanda, like to establish in Rwanda, even before the central bank. So 78% of transactions handled digitally. Like in 2023, the statistics show that 78% of transactions were handled digitally, and 80% of the customers of I&M Bank use digital platforms. So on this slide, you can see how I&M Bank has been excelling and also contributing to improvement of the society. So the first award was Gender Equality Seal. The bank received an award for contributing to promoting gender equality. In addition, for the 2 consecutive years, in 2020 and 2021, the bank managed to become like the best bank in Rwanda. So this shows how strong and potential I&M Bank is, which is promising to investors. And also, in 2018, the bank received an award of best small and medium-sized enterprises. So it contributes, like it helps small enterprises to grow, which is something that's really promising and good. So I would like to call upon Anik to continue to the next part.
Diving into the financial analysis of I&M Bank, we have based on the 3 key ratios, and we have analyzed the data from the financial statements, the income statement, the profit and loss statements, the balance sheet. We have found that the return of assets have remained above 1 for the years, as shown below. 2020, it was approximately 2, and 2021 it was 1, 2022 it was 1, and 2023 it was 3. And this is promising in the banks when the return on assets is above the rate of 1. For the return on equity, which shows how the capital was managed, in 2020 it was significantly above 12%. In 2021 it was approximately 3%, in 2023 3%, and it was approximately about 13% in 2023. Going to the cost to income ratio, which shows how the bank managed to manage their expenses depending on the income they generated. In 2020, the cost to income ratio was approximately 29%. 2021 it was 45%. 2022 it was approximately 51%, and 2023 it was approximately 61%. This shows how the bank expended the expenses they used in investments and other activities. Going to the profit margin, it shows how the profit of bank has been growing through the years. From 2021 to 2022, the bank has managed to increase their profit up to the rate of 2%, and from 2022 to have managed to increase their profit up to 10%. And from 2023 first quarter to 2022, the second quarter, their profit reduced. It was that time of inflation when the Rwandan inflation rate reached up to 14.7%, which was the first time in the history of Rwanda. So it is not for only I&M Bank, it was the national concern. All other activities also faced the inflation and their profit margin reduced. But based on their better management of the profit and assets and the equity, they managed to rise at the rate of 5%, reaching to the remarkable 7% of profits compared to the quarter three of 2022. Thank you.
Yes, thank you. I excuse my voice. And to continue with the investment risk, the first one is the valuation risk, whereby if I&M happen to increase the economic growth, if there happen to be an economic growth, there will be an increase in the credit and also the profitability of I&M, and vice versa if there isn't any economic growth. And another thing is the regulatory headwinds, whereby if there is any increase in the taxes or other regulatory impacts, there can be an impact or a risk to the investment, and also there can be competitions from the fintech companies like M-Peso, which are bringing more innovation. And to continue with the variation analysis, we based for two aspects, which is the relative valuation and also the absolute valuation. Firstly, for the absolute valuation, we based on three aspects, which is the asset-based valuation, which is technically assessing the fair assets that I&M has, and also the market capitalization, which analyzes the market's perception based on the stock share of I&M Bank. And also the third one would be the discount cash flow, which projects the future cash flow of I&M Bank, and also compare it with the present value. And as conclusion, we found that based on the discount cash flow, which is more accurate, which can help us to see the future projection of I&M, we found that in the future there can be 245.2 billion of Kenyan shillings, because that was the resource that we used, as we could find money in billions, in shilling billions. And also we found that there is an increase in the foreign exchange. And to continue with the impact I&M is having in the society, the first one is the environmental impact, whereby I&M has basically helped the environment in the plantation of trees, in projects whereby they were going in schools, and also other in the community in general, and helping them to know what the importance of planting trees and also other factors. And in the social impact, there is a partnership whereby I&M Bank partnered with Trust to help women get empowered, and they were basically investing them with handcraft. Actually, that's all. Thank you so much for paying attention.
Thank you, Team D. Can you quickly take us through your evaluation and your recommendation before we start with the rest of the questions?
Yes. As I was saying earlier, we technically based. The recommendation. The slide for the recommendation was in the.
Thank Thank you. Based on the investment analysis we made and valuation, we concluded to make a recommendation of buying shares in I&M Bank. Actually, we made just the fact that we based on to make a recommendation, but unfortunately, there's no recommendation. Like, we didn't include.
Maybe also for clarity, the company that you've just presented, so it's I&M Group, so it's the Kenya entity that you analyzed, not the Rwanda entity. Or it's both?
No, we analyzed the Rwandan entity.
In Kenyan shillings?
Since the main stock exchange market of I&M Bank is Nairobi exchange whatever, yeah, exchange rate. So she mentioned things of current the Kenyan shillings. Yeah, Kenyan shillings, but we analyzed the financial documents of Rwandan I&M Bank.
Have you looked at in your recommendation, have you looked at the Rwanda Stock Exchange share price in Rwanda?
Yeah, we have looked at it. It was approximately 1.772 billions.
Thank you.
Can you put the first slide? Yeah, there. It's written IPO, which is the initial public offering, 2017. Means I&M was listed at this period. At which stock exchange? Is it Rwandan Stock Exchange or Nairobi Stock Exchange? So that we can continue with questions, knowing it is which stock exchange?
It was the Rwandan Stock Exchange.
Okay. Then if it's Rwandan Stock Exchange, I don't know why you prefer to use Kenyan shillings, comparing the competition of fintech, M-Pesa, while we are having also fintech here, like mobile money and Airtel money. And as a listed company, means the data are available on their website and their presentation currency is Rwandan francs. You should use it. Make sure you use it next time. But my question is on the method you used. You said you used the dividend discount model and the asset-based model, okay? But I did not see what is the intrinsic value of the share you got. I have seen something like 245, and you can put the valuation slide, please, so that I can ask that. Evaluation. Yeah. Can you explain us that terminal value of 245.2 and the present value of 192? How did you compare it? What is the explanation of the two figures? And how did you use these figures to base your recommendation? That's the first question. The second question, in your financial analysis presentation, we did not see how I&M is complying with various benchmarks which was put in place by the central bank. Let me give you a clarification. There is some benchmark on the liquidity ratio to comply with, the capital adequacy ratio, the NPL, but you did not show us about those ratios which are important for a financial institution.
Yes, thank you. Starting from the first question whereby we found the terminal value and also the present value, we've based on the terminal growth rate and also the discount rate, whereby the terminal growth rate is basically like the pace at which I&M is growing. And we used the terminal growth rate, and by comparing it with the discount cash flow, by calculating the free cash flow for the 4 consecutive years in 2019, 2020, 2021, and 2022, and like adding them and then timesing them with the terminal growth rate. Like we use the growth rate with the discounted cash flow together. Yeah.
Talking on liquidity ratio, like liquidity is the ability of the bank to meet its short-term needs, maybe paying workers or maybe money for rent and other short-term needs of the bank. So it has to be 100 to show that a bank is really strong and can perform well.
Thank you for the good presentation. I think the investment highlights and risks were well articulated. Back to the valuation, if you could please tell me how you computed the discount rate. If you could go back to the slide, I want to use the term you've used. Yes, if you could tell me the formula you used to get the discount rate and the inputs you used. So how did you get to 5%? That's number one. And then number two, you know, DCF typically uses future cash flows. So how have you incorporated the future cash flows into your discounted cash flow? Because I can see 2019, 2020, 2021, and 2022. And then thirdly, in the investment highlights, you mentioned the profitability of the bank as a metric of their good risk management. If you can give me the logic between the profitability and the good risk profile or good risk management of I&M, I would appreciate that.
Yes, thank you. Starting from the question whereby you asked about the discount rate, where it came from, it is basically stated in the website of I&M Bank in the financial statements, whereby they say that the discount rate of I&M is basically 5%. And how we computed the discounted cash flow?
How did you use future cash flows given the years I'm seeing there are historic? But back to the discount rate, like conceptually, how would you calculate the discount rate? If I&M did not give you the 5%, how would you do it?
Basically, we've maybe seen there are rates and reports made whereby they say like the interest rates and how they have been varying in different years. If I didn't have the 5% on the website, I would compare them and see what it gives.
Do your colleagues want to give it a try? No?
Yeah, I think during the subject company presentation, they have highlighted some data. So that's what we based on as a foundation before searching for secondary data from online. And they presented to us that the discount rate was 5%.
Okay. You've answered the first and second question. Maybe we can move to the third one,
okay, so
which is on risk management and how profitability connects to the fact that I&M have good risk management.
Yeah. Basically, I based on that, depending on their decline in the profit in the second quarter of 2023, as the Rwanda was in the inflation, and in the third quarter of 2023, they've managed to boost their profit again and lies, which signifies a 7% increase in their profit, and that shows a better management and a high risk management. As the inflation was free to the company, they didn't just lay down, they managed to apply again and reach to the 7%.
In addition to what he said, as we can recall, during lockdown, like in 2020, some people were even excused from paying the loans. Like they were given an extended period since they were not earning income. So some people were excused and people were not earning income because some activities stopped. So regardless of that, I&M Bank managed to earn a high profit, showcasing like that showcased a relationship between I&M Bank making a high profit and being able to thrive during difficult challenges.
I think we are done. Thank you. Maybe a last one. Why are you 3? We've seen other teams are 4. Did you choose just to become 3? Did you have someone else coming in?
Yeah, we had someone else, but he was sick, so we excused the team before.
Thank you.
Thank you, Team D. We now invite Team E to come and present.
Good morning. Technology and globalization are reshaping banking worldwide, turning traditional border to bridge and traditional transaction are turned into digital opportunity. My name is Fabrice from Team B. I'm with Jane and Mr. Onole. E on number. B on before. E for today. For today we are E. Okay, I'm sorry. So we initiate sales recommendation with 12-month target price of 39.58 Rwandan franc. Reflect 11.17 downside from last close on 28 December 2023. This is read by decline in localization strategy and technology disruption. Net interest margin on pressure due to macroeconomic factor and asset quality begin to deteriorate. National GDP fall from 8.9 to 8.1 in 2023. Average inflation elevated from 4.6 to 18.1, and Rwandan francs depreciate 8%, 8.76% against US dollar, as reported in June 2024 by National Bank of Rwanda. So banking sector total asset increased 18.1% as in June 2023, and now we have 15 banks and regulated by National Bank of Rwanda. So in 1963, BCL incorporated in Rwanda, and 2012 I&M Bank acquired the majority of share ownership, and 2017 bank listed on Rwanda Stock Exchange. Now it's serving 3 customer segments through branch network, ATM, and online banking platform. So net interest margin descended 30 basis points in the third quarter of 2023. We calculated net interest margin by taking net interest income over earning assets. And we forecast it to be declining by 30 basis points in financial year 2024. So interest income is expected to drop due to market pressure. So central bank rate hike will increase cost of borrowing for I&M Bank, which will cause it to deteriorate. Return on equity experienced a decrease by 20 basis points in third quarter of 2023 compared to third quarter of 2022, and we forecast it to decline by 10 basis points in 2024. So I'm sorry, this remote is not functioning well. So non-performing loan ratio elevated from 3.48 in 2021 to 4.20 in 2022, and we forecast it to be 5.7 in 2024. So cost to income ratio elevated from 57 to 64 in third quarter of 2023. This is the amount of income used to cover operating expense. So it shows that it is above all major competitors in industry. The increase in cost to income ratio is forecasted to be at 65.7 in financial year 2024. So rising in current and demand account will limit I&M Bank to create earning asset, which will result in low earning and liquidity concern. Long-term borrowing sensitivity, we found that by one increase in interest rate paid, the amount of repayment will be increased by 3.79. We take an example for 25 million US dollar extended by Entrepreneurial Development Bank. So we found that there will be revaluation loss due to the depreciation of currency. We found that interest rate to be paid for that 25 million will be increased by 23.09, and the total amount repayment, if the rate of $1 remain for 1,275, there will be 90.25 increase. So in capital management, we found that I&M Bank is well capitalized and above the regulatory requirement. And that's right. we found that the off-balance sheet items increased by 25%, and we expect that to keep exposing bank to market credit and operational risk. Thank you.
Thank you, Mr. Fabrice. I'm quickly moving forward by evaluation section, where we arrived on 39.58 price per share by using residual income model. Not only that, we used also dividend discount model, where we got 40 price per share. And we got that amount by basing on terminal value that we had of over 12 billion, where we got terminal value by taking residual income over expected cost of equity negative expected growth rate, which is 2%, as you are seeing there. Okay. Also, that's how we computed the cost of equity, which is 14%. We used risk-free rate plus beta times market risk premium. Also, compared to the main competitors in Rwanda, we found that by using price to earning, I&M Bank has 7.17 compared to average of the three main competitors, which is 127.45. And also, by using price to book value, we found that I&M Bank has 0.936 compared to the average of the main competitors of 43.789. Thank you.
Thank you so much. I'm continuing about environmental, social, and governance. I&M Bank partnered with Development Board Support Equity Zina, where these have contributed too much about conservation of Rwanda mountain gorilla. Again, I&M Bank have also contributed to environmental through planting of over 60,000 trees. Those contributed to environmental conservation again. These have played crucial role in maintaining ecosystem balance and preventing soil erosion. Again, in November 2022, a bank have also partnered with Rubavu district in Usesama and Tekta. It was a mistake, where they have provided a healthcare support to 800 citizens where they affected the flood. About social, and then bank laws involved as understanding stakeholders' need, interest, and expectation, where the stakeholders can express their concern through, such as the client call center, social media page, or bank email address. Also, and then bank launched Ganzana and then bank business banking campaign to support micro. Sorry.
Time up.
Thank you so much. You're welcome. Your question.
Do you have any conclusion? Do you have any specific, any other conclusion you would like to give before we start with the questions? Quickly, or maybe on your recommendations.
Thank you so much for your recommendations to sell about where the target price is 11.17, and because of the factors like localization and is providing services, all of them of that factors have contributed to selling recommendation. Thank you so much.
Maybe on that, who is the recommendation addressed to? You recommending a sell. Who are you addressing the recommendation to?
So, thank you. We're recommending sales because we project and forecast into our forecast. We thought that
who are we recommending? You are recommending it
Oh.
to sell? Who are you recommending to sell?
Why we are recommending
Who,
sales?
the person or the
Oh, we are
type of
recommending the shareholders who hold shares to sell.
So current shareholders,
Yeah,
you're
to
asking
sell.
them to sell.
Yeah, because we forecast for downside.
Okay, thank you. Another few questions from me is I don't think I've seen your review on the management team and the board. Did you have time to review, to analyze that? And we also seen in your projection, you're projecting a non-performing loan ratio of over 5% for the next 1 year or so. Is that a good thing or no? And how do you link that to your recommendation?
Thank you. Let me start about the first question where you asked if your organization or a management team. Yes, because of a time, there's governance where there's a board consists of 9 directors, 1 executive director, 2 nominees, 9 executive directors, 6 independent, and an executive director, including board chairman. Thank you. Let me continue about the next question.
On that, so in your review, you just told us what, the structure and who is there, but in your analysis, did you find appropriate the current management of board in place, both the structure and the quality of the team members who are there?
Yes.
Or what's your take on them?
Yes, it is properly structured, and we have analyzed them. It is collected, no problem.
Thank you. And second thing I can say is that Benjamin Mutimura is now CEO of I&M Bank, Rwanda, and he is a reputable man. He has been in 13 years experience in the banking industry, working in Bank of Kigali. To the second question about non-performing loan ratio, this is calculated by taking, in Rwanda we have 5 classification of loan: normal, worse, substandard, doubtful, and loss. The non-performing loan are classified in the last 3 stage, which is substandard, doubtful, and loss. So we take that amount which are in that position, and we divide by total outstanding loan. That is where we found non-performing loan ratio. And the increase in non-performing loan ratio, what will show us? It means that there is high probability of a default. The customer default are increasing per year. So we expect in our forecast, based on economic condition, based on past year and current condition right now, we forecast is to increase. That will not be positive, it will be negative because it's equal to the loss, doubtfulness of customer increasing.
Thank you. I would want to know, why did you compare the performance of I&M with only BPR, BK, and equity, while we have almost 14 to 15 banks in Rwanda? Why did you choose only 3 out of them? The second question is, what are the key drivers of the projected poor performance of I&M? Because as you have seen, the NPL is 4 point something, below 5%, but you project it to be worse. Everything is projected to be worse in the future. Means, according to you, there is no future for I&M, if we can say it like that. What is the key driver which caused you to have such projection?
Thank you. Quickly starting by the first question. We chose to benchmark I&M to the main competitors because once you are benchmarking, you base on some business that are looking somehow the way you operate. So that's why we chose the bank that has a big share capital compared to the range that I&M Bank has. So next question.
So you asked about key drivers. Okay, thank you. We thought there is in bank because its uniqueness. We thought projected about net interest margin, comparing interest and earning asset and interest received, interest income to earning asset. All asset held doesn't earn interest. So to know actual interest received, we have to compare it with earning asset. So that we saw that in history performance in third quarter of 2023, there was a decline in earning asset of 13 basis point. There was decline. And return on equity, there's 20 basis point decline on return on equity, taking net profit over total owner's equity. There was decline. Return on asset, there was 20 basis point decline. So we are not projecting that there is no future for I&M Bank. No, that is not our option. But that it means that is what we found. We are not imagining the decrease of third quarter 2023, but we are projecting for 2024. So I think based on return on equity, based on return on asset, based on interest income margin, based on cost to income ratio, so that is where we based our assumption.
Thank you, Team E. Thank you for a very good presentation. I like the fact that you started from the macroeconomic presentation of the country, you narrow it down to the industry, the banking industry, and then you focused on your analysis of I&M Bank. It's a good way to present the perspective in which you are doing your assessment. You kind of rushed a bit in your presentation. You went very fast. We could not digest the information that was presented to the screen. That's why I wanted to ask a few questions, especially your assessment, without even looking at the screen, your assessment of the capital adequacy of I&M and the earnings. If you can comment on those two, I'll be happy. What do you think about the capital of I&M compared to the industry, and also its profitability vis-a-vis the industry overall?
So first, I'm going to say one thing, and my colleagues will add on more about regulatory requirement. We found that it is both Tier 1, Tier 2, and total capital is exactly above the regulatory minimum, which show that it is good secured. But we can't ignore that maintaining excess capital goes with higher cost. As we maintain high capital, high cost increase. So we forecast that, and the treasury capital will increase cost for bank.
Thank you so much. As he said about the I&M Bank has excess the capital. Yes, it's good, but to manage this capital is very also operational cost. And again, remember those capital, I&M Bank have to pay dividend to those shareholders, and those capital are not working. So that's why I recommend selling. Thank you.
Thank you. The profitability of bank based on previous, let me find that slide. Based on previous, we find that return on equity, total equity, that shareholders amount. We find that they experienced a decrease due to, that doesn't mean net profit decreased, but the owner's equity increased compared to the net profit. They have been extremely increasing the owner's equity than increase in profit, which resulted from descending from 15.72 in financial year 2021 to 13.03 in financial year 2022. 2.69% decrease in return on equity in financial year 2022. That is where we based on by forecasting that it will either decline more to 12.78 in 2024. Profitability is increasing, profit, we see it, but the owner's equity is increasing too, more relatively to the profit. And thank you.
Thank you very much. Indeed, a very detailed presentation. Thorough work, very good. Just wanted to understand the valuation methods that you chose. If you could just tell me which ones you chose and why you chose those ones. Don't even go into the details. Just tell me how many did you use, and then why did you choose those ones?
Thank you. We chose to use two models, which is this dividend discount model and residual income model. And we preferred to use target price of residual income model because it's the one include cost of equity, which will be a good, which will be an important element for the banking sector. That's why we chose residual income model. Its target price is the one that we use, which represent a downside of 11. There is a mistake of typing error. Here, there is 11.17%, not 12. So that's why we chose the residual income model. Not only that, we used also dividend, but based on important element in banking sector, which is cost of equity, we chose the residual income model.
Additional point about that, it is crucial that we more emphasize, we prioritize more residual income model because of natural banking. It's different from other business. So residual income model incorporate cost of equity. Banking capital relies more on owners' equity and capital. That is why we use residual income model. We prioritize it more than other.
Thank you for a very thorough presentation, and you've educated us on a number of key parts. So to get your target price of 39.58, so the DDM had no weight whatsoever. So when you say prioritize, means maybe you give it a higher weight, or do you mean you just only selected the residual income model? I'm just trying to understand.
No.
So
Thank you for a question. Dividend discount model, it matters a lot. It matters a lot. But if you look at the figure, it's somewhat close. But if I could I should call it judgment or anything, but it is good measure and the model we can use to determine price. And if you see there is no huge difference, there's no huge difference. It's a good model to use, but we choose our priority and our team, maybe it's our choice more than that.
Okay, that's fine. And why did you not consider using a relative valuation? So you've gone ahead in other pages and talked about price to earnings, price to book. Why didn't you use that as a valuation method? And then you started off by talking about your investment thesis. If you can just go back to that and spend 30 seconds to recap it. Yeah, we moved quite quickly past that, and there were some good points. So there are two questions. Why not use relative valuation? And then the second one, if we can go back to the beginning of your presentation, I just want to see the investment thesis that you had, or the overview of your presentation.
Yes, thank you. The reason we don't use relative valuation, it's difficult to have a company which are completely similar to what you are doing. Similar to, we fail to find bank which is similar exactly with I&M Bank. Because in asset you find someone have billion, other have like 400 million. So we didn't want to spend much about that. We used relative valuation in comparison, but we didn't rely on relative valuation making decision of our future projection. So it's not that we didn't use it, but we compared I&M Bank with major peers, but we didn't use it to make our decision. So going back to our overview, it's this one. Oh, thank you. This is what was the factor which shows that we will contribute to the continuous decrease in the income for I&M Bank. The first one was the decline of localization strategy. We know that I&M Bank most target urban center and place near to the borders. In urban center in Rwanda, we have like 17 point something as total population. But there is a few customer base in urban area compared to the rural and compared to the bank which provide financial service to the low price. And we found that it exposed to the country risk. For example, branch in Rusizi and the Rubavu was targeting people from DRC, but nobody is closed how they are facing that kind of risk. Net interest income is in risk for macroeconomic motion. We know what happened. Now they are receiving inflated currency due to the increase of inflation in the country. The depreciation because they have some liability they have to pay in US dollar that increase cost. In emergent acquisition, we know that it take place in our economy in few days ago will increase competition and it will be difficult for I&M Bank to handle it. The asset quality, we found it by the increase in non-performing loan. Because we know all loan is the crucial business for all banks. So decrease in loan means someone lost. Mortgage and equipment loan are loaned for long-term period. The decrease in long-term period, the probability of default of custom also increase. Thank you.
Thank you, Team E. May now have a seat. We are now inviting Team F. It is the last team, not the last as a number, but is the last one in this round. By the time they are coming, I want to remind you in an agenda, after this presentation, we'll be having a second round. So we'll choose the best 3 performer in this round, and then those 3 teams are the one which is going to perform in the second round. So after that, we'll choose the first one and the second one, and so on and so on. Thank you.
Good morning, all. We are Team F presenting I&M Bank Rwanda with current price of 44 Rwandan francs, target price of 45 Rwandan francs, which remarks 35% downside as of 29 December 2019. I&M Bank is one of commercial banks operating in Rwanda, holding 78,000 of customers with 1,279 shareholders, 17 branches across the country, and 456 of team members. They're using different strategies to take over the market in Rwanda, ranging from percentage growth of 11, employees engagement, and digitalization of their systems. They have got some historical trajectory since their launch in 1963, where in 2006 they have become the first bank to sell leasing and mortgage services in Rwanda. Last year, 1 year later, in 2007, the first bank to launch electronic banking. 2008, we were the first bank to sell their corporate bonds on Rwanda Stock Exchange. In 2012, they got partnership with I&M Group. 30 years later, they changed their name to I&M Bank Rwanda from Bank Commercial de Rwanda. Lastly, 2018, they have launched their core banking system in their journal of digitalizing their systems. As I've said, in 2012, they have got the partnership with I&M, which made them to get footprints across the region from Kenya, Uganda, Rwanda, Tanzania, and Mauritius. Looking at their business models, they are serving different services, ranging from commercial banking, treasury, and bank assurance. They are serving different customers from corporate banking, retail banking, and lastly, business banking. Their customers are using different transaction channels, where 70% to 72% are using digital transactions, and the remaining 28% are using ordinary ones. The financial sector in Rwanda holding 16 institutions, where among them 14 are financial institutions and 3 are non-financial institutions. Precisely to industry, banking industry in Rwanda have different banks, including I&M of 8% of market shares, which is a good position. And the banking industry is remarking a profit, net profit after tax year to year has increased. I&M Bank is holding good position comparing to its peers like BK and Equity, looking to your leverage ratio, cover capital, and Tier 2 and liquidity coverage ratio. I may give floor to my colleague to say about SDGs. Thank you.
Continuing with the ESG part, which is the environment, social, and governance part of the bank, we find that the company was able to plant trees in Bugesera district. They were also, I can say the headquarters were built in a way that they have a solar panel on the rooftop, which saved up to 210 kilowatt, which saved the air conditioning cost. Continuing with the social part, they extended their visit to the Carnegie Mellon University and the diaspora as well, whereby it increased their customer base by 29% and the 38% increase in digital transactions. Continuing with the governance part of the company, the KPMG Rwanda Limited does the audit, and the reports are made public to increase transparency. Up to $500,000 are used in compensation for the board of directors. Continuing with the investment risks the investors are guaranteed to meet. The first one is ranked as the market risk, which includes the inflation exchange rates, which the company doesn't have high control over. The second and the third are operational and strategic risk, where we find that in the strategic risk, the new products are launched, and in the operational risk, based on the data that was given last year, It lost up to $10.3 billion, but they were able to get back their money since it was insured. The last one is informational technology risk, which can easily be corrected. Since the security was tightened, it was easy to correct this. Let me.
Thank you. So moving on to the financial analysis, looking at the return on asset ratio, as we can see, it decreased from the previous year of 2021 to 2022, which is 1.9, which what this means is that for every 100 Rwandan franc, it's generating a profit of 1.9 Rwandan franc. So moving on to the return on equity, it still decreased, and which you can see is 13%, which that means is that for every 100 Rwandan franc of equity, is generating of 13 Rwandan franc. Moving on to the total asset turnover. Here is using the total assets to generate total sales revenue. So as you can see, it was consistent from 2020 to 2021, but in 2022, it increased by 1. What this basically means is that for every 1,000 Rwandan franc is generating of 7,000 Rwandan franc sales revenue. And looking at the debt to asset ratio, this basically tells us like what percentage of the asset is financed by debt. So as you can see, it kept decreasing, but which makes it like less leverage, which is a good thing. But like it is 85.48, which means that 85% of the asset is financed by debt. Moving to debt to equity ratio, this one was also decreasing, and as you can see, the most recent 2022, which is 5.8, what that means is that like it's 5.8 times of the equity is debt. So you can see like if 100 Rwandan franc is equity capital, so 580 Rwanda franc of it is debt. And looking at the book value per share, this is the net asset. So this will like tells us it increased by 6 from 2021 to 2022, which is 47. So I'll pass to my next colleague. Thank you.
Yeah, now moving on with the financial analysis part, or more I say like the evaluation part. All right, so we have a target price with the intrinsic value of 33.72 francs with a downside of 23.56%. So this means that the company throughout the time has been reducing in terms of its value. And where do we get it from? So starting from 2018, it had a dividend yield of 12%. And as we know, the investors rely too much on the dividends. Now, as of 2022, the dividend yield is now on 4%. Now, this has been majorly caused because of the reduction in earnings per share, which in return was also caused by the number of outstanding shares, which have been increasing in 2022. Like in 2019, the number of outstanding shares were 500 million outstanding shares. Now, as of 2022, it was 1.5 billion outstanding shares, which is the cause why on the earnings per share it has been reducing over the year. And also the dividend payout ratio started initially with 40%, and as of 2022, it was 30%. It was reducing because they tried to increase their Taiwan capital in 2019, that was the case. For 2020, we estimated the dividend payout to be 20% because it's between 23% and 19%, and we got that dividend per share. Now moving on with the relative valuation to compare to peer banks. With KCB and BK and also equity, if we invest in 7.1 Rwandan francs with I&M, we generate 1 Rwandan francs of profits. But for the other banks, it's going to require us to invest in less to generate the same profits. Moving to its price per book value, we can see it is undervalued, but then relative to the other banks, it is not really that much undervalued. Where we came back with the price, 35 Rwandan francs, and book value of 40.3 Rwandan francs. So I can end recommending you to sell your shares with a downside of 20% and target price of 35 Rwandan francs. So dear investors, as I am also a current holder with 100 shares in I&M Bank, I can really recommend you to sell your shares because that's a downside of 20%. Thank you very much.
Thank you, Team F. I have a few questions. One, starting with your target price. How did you get to the 35? Was it an average of the methods that you used, or did you choose one of them? That's one. Two, how did you project your dividend per share? So you have about 4 years projected. Did you refer to any things like a dividend policy? How did you get to that? The third question is on management team. What's your opinion on the management team? Is it a competent team that we can trust, or do you think there's something that the bank can improve on? Maybe a final question is on your review of liquidity. I saw you made some review on the capital adequacy and the rest, but what's your opinion on the liquidity? And also, can you confirm whether you've done any sensitivity analysis for the company, for the bank? Thank you.
All right, thank you very much. May I repeat a little bit of the last sentence, the analysis part?
The last question is on your review on liquidity and sensitivity analysis.
All right, thank you very much.
What have you done about that?
All right, so I'm going to start first with the matrix. Initially, when we were valuing using the intrinsic value, we went with the dividend discount model, and within it, we used the dividend capitalization model, but where we reached on that price of 33.72. Now, as for the others, we mainly focus on its relative banks. So price to earnings ratio and price to book value ratio, where we give it a weight of 20% each on each, and then for the DM, we give it 60%. So combining all of those three methods, we came out with a target price of 3,500 francs. It's a 12-month target. Now, as I go to the forecasting part, if you may allow me, so this is the income statement. We focused on 2020 to 2022. Now, the forecast, yes, so there is a percentage change for each and every expense. So we use that percentage change from it in order to forecast for the next coming 5 years. But I would like to note on that, on the operating income, we can see there is a high change, 217%. And normally it is not the one the bank had. So the high increase in that operating income of 217%, it was majorly due that in 2022, a large number of people who had defaulted on their loans paid back the loans which they were due to the bank, majorly around like 1 billion. So we estimated using now the previous years on that 217%, we use 15%. And another key thing to note is majorly an increase on the administrative benefits, also in 2022, majorly because they had a lot of repairs to do, which increased up the cost, but for there we assumed a 19%. So this is how we did the assumption. We based on 2020 to up to 2022, used the percentage change, and we forecasted for the following years. Now, as for the question of, the last question, we're focusing on the team management and also on the liquidity coverage ratio. I would like to invite my team members also to continue with the questions.
Okay, about liquidity, first of all, you have to understand what is liquidity. When about to liquidity, it's let's go on the slide where we're comparing I&M Bank liquidity with an industry. Someone to help. As you can see on liquidity coverage ratio, I&M banks hold like in 2020 it was like, as you can see, it is in the green color. It was like the first one high rank on the liquidity coverage ratio, and the second year it has become the second one, and the last year 2022 it was like a second, comparing to BK and equity. So this means that looking to the debt side and the asset they have or their equity, what the portion of the debt they have, so how to make them financially stable, continue to be financially stable, without relying to those debt they have.
So the way we judge the management team of the bank, we have seen that in 2023, the bank lost up to $10.3 billion due to fraud. And the way the company was able to track this in a period of 17 days, and since their money was insured and following up with all those activities and those procedures, we judge the management of the company in a way that they work together, they understand each other, and they understand each other, and they all work to achieve the same goal. So following with the fraudulent tracking, this was in the operational risk, and the strategic risk comes in as well, since they were able to have different strategies to tighten the IT and security of the company, the services they provide. All this proves that the management team of the company is a strong one. Thank you.
Yes, I would like to ask about the governance aspect of I&M. You did not show us what is the relation between the board and the management. Is there a CEO duality? Means the CEO is also the chairman of the board, or there is a division of the task between the
Okay, on the governance part, the board of directors has the CEO as part of it, who is the chairperson, and the next part
means the managing director or the CEO of I&M is also the chairman of the board of I&M.
Yes. Yes.
Okay.
Thank you, team, for the presentation. My question is about the growth in assets. I don't know if any of your slides presented the growth in assets, and what do you think about how I&M assets are growing? If it's a good growth, if it's a modest growth, and what's the impact of that asset growth on the valuation of the company?
So looking at this, as the return, if you can see at the growth of the assets, okay, return on assets is like how they're using the asset to generate their profits. But I feel like we can refer to this. But from the 2020 to 2022, I feel like there was an increase of like in the asset, like the reason why they were like more able to use to generate more profit is because of like they're increasing their asset and they're also increasing their efficiency. And then I feel like this could answer like part of the question. And
And as addition, when you look to outstanding shares, as you have said, in 2020, they have extended their outstanding shares to which they didn't give out the dividends. They hold the shares, but they expand the shares, giving the bonus to their shareholders. So this extend their, if I can say, the asset, in a matter of how they are going to make money from those assets without giving them out the profit or dividends.
Let's talk about the loan growth. Have you made an analysis of how the loan remittances are growing compared to the industry? Because the ROE is a ratio. Maybe the numerator is growing faster than the denominator. I'm just talking about the assets, the loan book. If you did not make it, it's okay also to say we did not just analyze the assets.
So on the return of, I mean, like on the assets, we had also done a forecast on the balance sheet. All right, I see we did not include it in this slide. Probably might have forgot about it, but in the report, we actually also included the forecast of the bank's assets on its balance sheets on its side. The way we did for the income statements, also the same we did for the bank assets. So overall, as the time is going, it has been increasing in terms of assets. Majorly, we can talk about like this new building of HQ, which is environmentally friendly. And when also speak of that one, coming back to the time in 2019 where they decided to decrease the payout ratio, they wanted to increase their Tier 1 capital. And we also, when you look into fast in their cash flows, you can see that they are trying to increase the amount of assets that they have. So overall, throughout the time, the bank itself is growing in assets. But as of the part where we analyze it compared to the industry, that I could not say that we actually looked upon it, but the bank itself is growing in terms of assets. Thank you very much.
Thank you to the Group F. Very good presentation. Maybe just a general comment. I&M is, or a question, I&M is listed. Did you try to understand a little bit what drives their price on the Rwanda Stock Exchange?
All right, thank you for the very good question. So in terms of looking at the stock market in every individual country, we look at the demand and the supply. So majorly focusing in terms of the outstanding shares, back from 2019 where they had around 500 million outstanding share to 2022 where by now they have 1.5 billion outstanding shares. It means the shares which are being sold on the capital market, they have increased. So their supply has increased, but regardless of that, the demand from the stakeholders or shareholders has not been increasing from the market itself, majorly due to its competitors. As you spoke of, there is Bank of Kigali, Equity Group Holding, and also Kenya Commercial Bank. So when you look also on those parts, it's because those cost drivers means that the demand from the market is not high on itself on I&M banks. So people are more willing to buy from relative other banks rather than I&M, and that will drive its costs. majorly it will go down because not many people are wanting to buy it. But if people have now more interest, they'll be looking more into buying it and its price might increase. So that is how general can say it. Maybe I don't know if I answered the full question. Thank you very much.
Thank you, Team F. I think this is the last team in this round. We are now going to tally the marks of the first round. And in the meantime, by the time we are tallying, we have a tea break there. We are going to have 15 minutes. And then after 15 minutes, we come back here and then we announce the 3 best. You are all best, but there is the best. Best by the best, if I may say like that, so we might limit it. But we choose the best among the best 3 performers. So those 3 teams, they are the one which we're going to the the second round, where we'll choose another 1 team which will represent our country for the region. Thank you.
Hello. Welcome back from the break. This is a tricky moment for me, given that the teams have really brought out their best game. We are looking to proceed to the next round. And your efforts and your presentations and your eloquence has been graded. First of all, by the written reports that you submitted some time back. We had 4 graders who independently reviewed all your reports. Each grader got all the reports and independently reviewed your works. And I can guarantee you that all the graders are industry opinion leaders. They have valued companies. They've prepared financials. Some of them contribute to the preparation of the financials of banks and other financial institutions. So we trust their judgment given their experience. And without giving away details, the judges you're seeing here are very, 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 very experienced in this business. Maybe they had it easy with you, but in real daily life of their jobs and businesses, they would have asked you bigger questions. So I'm trying to say they've looked at all the details. They've looked at maybe what was written and was augmented by what you presented here. But first of all, allow me to congratulate every team for the efforts each individual and each team has put in. So, we've collated your results, the works, in 2 parts. One was grading the written reports from each of the 4 graders. We've also put together the marks that the judges present here, the 5 of them, have individually and independently given you, and then we've graded them, and then we've put everything together and we've come up with a final scoring. And as I presented early on at the beginning, I said for the first round, the written report takes 50% of your marks, and the presentation takes 50% of your marks. So allow me, without further ado, to announce the results. As you can see, I was very independent. The judges were independent. They gave it to someone who put everything together, and I'm also someone who wasn't involved in any of this. So whatever I tell you, please accept it. There is no rigging. And like I said, everyone has done a good job. So right to the scores, and before as I announce them, we are picking 3 teams which are going to the next round, which should be starting in the next few minutes. So I'll start with Kepler College, Team E, 48 marks. Kepler College, Team D, 54 marks. Kepler College, Team C, 50 marks. Kepler College, Team B, 64 marks. Adventist University of Central Africa, Team A, 51.5 marks. And University of Rwanda, Team B, 61.05 marks. So, congratulations to everyone, first of all. this is a game of inches. You know, whoever wins is winning just by a margin and many factors. So I'd like to announce number 1, Kepler College Team B. Congratulations. Number 2, University of Rwanda Team B. Congratulations. And number 3, Kepler College Team D with 54.8 marks. So the rest of the teams, still congratulations, and we are moving on to the second round. And the 3 teams are going to tussle it out again. We believe you've seen how competitive this is. Maybe you've picked a leaf from one of your competitors, or you've remembered something that you hadn't covered. So allow me to give the mic to my colleague, Safari, to tell us how we are going to proceed to the second level.
Thank you. The next step is we are going to have 5 minutes for those 3 teams, maybe to have a rehearsal of their presentation, then they come back, they present here. There's someone who has a question? Sorry? We are referring to initial teams. Yeah. Yeah. Because the marks are combined, written report and presentation marks. Okay. So as I said, we are going to have 5 minutes for those 3 teams, and then they do the rehearsal, and then they come back here for presentation. Another thing is, here we are not going to choose who is going to start. I'm going to do randomly here. Let's start with the Kepler College Team D and University of Rwanda Team B and Kepler College Team B. So let's have that time and we do as quick as possible. Hello? As we are going to the second presentation, I would like to tell you this. So the team will come here and maybe if they have a special thing, because they are going to present what they have already presented and what they have done before. So it's the same presentation they had. So now, if the team comes here in front, unless they have a special thing to present in 1 minute, and then the judge will ask them the question. After that, it is not going to be 10 minutes as it was in the first round. So we want a team to come here. If among of you have a summary in 1 minute to present or in 2 minutes, so maybe you have something you didn't tackle before. And then after those 2 or 1, the judges will ask you some questions to defend your presentation, because it's the same work, isn't it? Okay? Is it clear to everyone? Or maybe I have not explained well. Okay, judges, they want you to see the teams which are going to present, number 1, number 2, and 3. There is Kepra, College, 2 teams from Kepra, D and B, isn't it? You might stand up, and then the judge, they can see you. So, and the University of Rwanda team, University of Rwanda. Okay, thank you. You might see it. So, then I think now we can start. 2 teams will go out, and then the one will remain here, and as they come here to present. May I remind you how we did? How I said Kepra team D, team cost is going to start. It is D, yes. It is the one to start, and the other team who are going out and maybe to do the rehearsal, and then they come after another, the first one. Let's all be quick.
Thank you once again. So we are Team D, and we are going to have a summary of some things that we consider important in our presentation. So we'll go straight to financial analysis part. So we start with the capital adequacy ratio of I&M Bank. You can see that from the past 3 years, the capital adequacy ratio of I&M Bank remained relatively above the 15 minimum requirement, which ensures that I&M Bank can be able to absorb or tackle any unforeseen or unexpected financial losses. But here, there is a point of recommendation to I&M Bank because you can see that even though it remained relatively above the 15 minimum requirement, it has been tending to decrease, tending towards 15. So I&M Bank should enact policies so that they can start to raise their capital adequacy ratio for the next years so that they ensure their financial security. So going to cost to income ratios, you can see that for year on year, the cost to income ratio has been increasing from the past 3 years. So you can see that especially for the last year, which was 2023, there has been a tremendous growth because it moved from 62%, then it goes straight to 65%, which is not desirable for a bank to have its cost to income ratios rising because it means that for equity shares invested in I&M Bank, in order to make an income of 65 Rwandan francs, you have to invest 100 Rwandan francs. So I&M Bank should also try to minimize or have their cost to income ratio declining. And that's what they did. Sorry. That is what they did because we went to vertical analysis of continuous quarter per quarter from quarter 1, quarter 2, quarter 3 for 2023. And you can see that even though it had increased from quarter 1 to quarter 2, but I&M Bank managed to slightly minimize their cost to income ratio by 2%. So we recommend I&M Bank that they should keep trying to minimize their cost to income ratio because it will help them to minimize the operating expenses, therefore generating much income from their operations. So debt to asset ratio, we saw that I&M Bank debt to asset ratio has been declining from the past 4 years, but you can see that the cost to income ratio is high, around 88, 86. So, and what this means, it means that the bank is highly leveraged, which is somehow an opportunity for investors because if the bank is funding its asset from loans, it means that the bank needs more investors.
Time up.
Thank you. We go for the questions.
Thank you. So I want you as a team to reflect on the exercise you've completed. As a team of 4, you've gone through this process of, reviewing I&M, valuing, and then presenting. There's usually what you could call a general framework that you should have followed to help you throughout the process. Could you talk about the steps that you will take when you're doing a financial analysis? What could you have done first, second, up until now, and then maybe later on? So basically, your thought process throughout the valuation, what you could call a financial analysis framework.
Thank you. When we try to reflect for our process of doing this financial analysis, what we did or how we understand the process. So the first step is data collection about the bank. So we collected the data. Then after data collection, you need to check for its validity to know that, to make sure that you are using updated and reliable data from reliable sources. Then we went straight to understanding the current, it was in September 2023, I'm using the term current, but it was then. So understanding the current financial standing of the bank about different financial aspects, including these liquidity, debt ratios, and all other financial analysis measurements. Then we also made some projections that we made in our report, on which we also based to make the recommendation in the future, so that I&M Bank and the investors can have some points to consider in the next years to come. Thank you.
Do you think, so you've recommended, you've given out your recommendation. Do you think there's any other, as an analyst, so someone who recommended something, do you think there's any other further step you take beyond the recommendation?
Sure.
Which ones?
I think, except that we are currently students, if you are a financial analyst, after making a recommendation, you need to follow up with the implementation of your recommendations and to see, for instance, whether the forecast you made was right, to make sure that it would be illogical to make prediction without needing to evaluate whether the prediction was correct. So I think the next step should be to evaluate the effectiveness of the recommendations that we are making here. Thank you.
In addition to what my colleagues say, in addition to the recommendation, the financial perspective that we're giving, I believe that I&M Bank should continue to invest in the digital banking. As you see, it's one of the main factors which is helping it increase its profitability. So I would recommend that it invest more and strengthen its investment in digital banking as it touches diverse customers. Thank you.
Thank you. So you rightly mentioned that there was data collection as one of the steps, early steps. Can you take us through some of the challenges you might have had into that exercise and how you managed the challenges?
Thank you. There were different challenges. First of all, the data were secondary data, so which somehow brings some burdens to us because they were secondary, they were not first-hand data. We managed this challenge by approaching our mentor, so that is how we cope up.
Thank you. As my colleague said, since we were using secondary data, like there were some things which we would like try to find information like online, and we couldn't find them. But as he said, we had to talk to our mentors for them to provide us with the information to be used, since we wanted to use them to collect the data and make the financial analysis.
So were you able to talk with I&M?
Yeah, they assigned us, like each team, they had the mentor which they had assigned to us.
And they were helpful with the data. Were you able also to look at different research that are done with by investment banks or stockbrokers? Did you look at such reports on the stock?
Okay. Responding to the question, yes, we did some research on Rwanda Stock Exchange and various I&M Bank resources. At the start of the competition, they told us that we should only use resources of I&M Bank, no other sources.
So, but also we look at different central banks report to know some liquidity backup. So that's all.
We also tried to refer to financial industry expert groups and including the bank's supervision, banking committee for supervision, which enact what is called Basel agreements that put different measurements about banks, what are the regulations. So we tried to refer to different resources, as my colleagues have said. Thank you.
So suppose you are asked to do the same exercise in Tanzania or in Kenya. If you are to redo the industry analysis, industry comparison, what did you learn from this exercise? So what's the best approach to do a good industry analysis, and what are the key ratios that help you determine how a bank stands compared to its peer competitors?
Thank you. First of all, allow me to thank the CFA Society for arranging this challenge, because we have learned a lot from this, which makes me confident that if I am assigned to do this in other places, I have the baseline of what happens in the financial field. And I think we can do that by approaching industry experts like you or many others, so that we get deeper understanding of how to analyze, what to do in financial analysis. But when it comes to I don't remember the last question.
Because you did not answer what I asked you. You went to thank the CFA Institute and then you lost your ideas.
Sorry. I was really hurtful for this. I needed to thank them.
Yeah, just how will you go about doing an industry comparison, comparing a bank to its peers?
So I think you asked the key ratios that can help us do that. I think there is capital adequacy ratio, because it shows the investors the financial security that the bank has. That is one. There is also debt ratio to show the investors whether the bank is highly leveraged, so that they are sure that their investments are not going to be used to pay for the loans instead of bringing them profit. And we can also use target value and market value of the equity shares, because if we say that the equity share of I&M Bank currently is 45, while in Bank of Kigali is about 300, so it is important for the investors to know why we need to buy this and at which cost do we need to buy these shares. Maybe my colleagues.
To add on, I can talk about the liquidity coverage ratio. As I explained, like a bank have to have like 100%, because it helps them to ensure that in case, for example, a financial crisis occurs, they will be able to meet their short-term obligations for at least 30 days. So I think that would also be a big ratio to consider. Thank you.
Your work was to make a valuation of and we know we have various methods to do equity valuation. We have present value method, multiple method, and asset method. Then I want to know which method you used and why you did not select the other methods. The second question, what is your conclusion and why you made that conclusion?
For the evaluation method based on the asset-based method, it mainly focuses on the assets and the income of the company. And I think when we're presenting, you got the data that we collected when doing the evaluation. Maybe my colleague can answer on the conclusion.
So the last no. Okay, thank you. First of all, about the method that we used the asset-based approach because we needed to compare the I&M Bank Rwanda's assets and its liabilities, and then we can be able to calculate its net assets, which also are a little bit connected to its target prices and the market prices of the equity shares. That is the net asset. Then, would you remind me the question about the recommendation?
Question was, as I can see, you made a buy recommendation.
Sure.
Why did you recommend the buy of the share, the investor to buy the share of I&M instead of selling it or holding it?
Yes. So we encouraged the investors and the public to buy shares in I&M Bank because of the following reasons. The first reason is that we found that I&M Bank has a desirable RIO, return on, there is a typo there, we mixed it somehow, but it is return on equity, which means that because like investors, you need to invest somewhere where you get something in return. So that is one. The bank also has high capital adequacy ratio, which means that if I am going to invest in I&M Bank, I am assured that my investment have security because that capital ratio helps the bank to tackle or absorb any unexpected losses that can arise. The bank also has that high liquidity coverage ratio, which helps the bank to meet its short-term obligation without needing to liquidate other illiquid assets. So it has, I think it was 206%, which is far more greater than 100 minimum requirement. Another thing that we based on to make that by recommendation is because we saw that I&M Bank has high debt ratio. It's about in between 88 and 86%. What that implies, it means that I&M Bank is using much of its loans and debts to fund much of its assets and operation. What it implies is that there is room for investors to invest in the bank so that they can cover that gap of using much of asset, then they can be able to use their equity instead. And lastly, their equity shares price are very low because it's only 45 Rwandan francs, which means that it is affordable for the investors to buy that shares. Thank you.
Yeah, the question was on that conclusion you made. You said the equity shares was low, 45. It's affordable for everyone.
Not everyone.
But the question, okay, not everyone. Yes. Let me go with your idea. Yes. When we are doing evaluation, one of the objectives is to come up with the intrinsic value, which is considered as the real value of the share, yes, which we compare with the value which is on the market, the current price, okay? Yes. Then what is the intrinsic value you got from your valuation, and what is the current price of a share of I&M, so that we can make a conclusion. If it is undervalued, we say you have to buy it. If it's overvalued, we can sell it. Yes. Or we can say, oh, let us hold it because of some aspect we are seeing in our valuation. Yes. Then you say buy. But I don't see the intrinsic value, I don't see the current value, so that we can compare it to know if we have to buy.
So from the data from Rwanda Stock Exchange, as of 22nd February 2024, it's this month, we found that the current value of equity shares about I&M Bank, it's 45. Then in the last year, about the analysis we did, the intrinsic value was 55. So we did not include that in this presentation for the interest of minimizing the number of slides. This time is limited, but we found that it's 55, and that implies a 10% upside increase. So we based on that you can see that 10% upside, it means that the equity value is growing, which means that if I invest in the I&M Bank today, I am somehow sure, according to those predictions, that my share, after some time, it is going to increase in its value. And after probably, let me say, 1 year, when I want to resell it to other investors, I will have some amount of interest. That is what I based on to encourage investors to buy.
Thank you for your answers. Commend you for getting to this stage of the research competition. I'll ask the last question. It has 2 parts. It's related to ESG. The first one is, how does ESG link to value creation? That's the first question. And the second one is, out of the initiatives that you assessed of I&M in the space of ESG, which one, in your perspective, created the most value?
Thank you. The SDG, they are specifically bringing profit, but in indirect manner. Because, for example, let's take school gear. I&M is making some partnership with BRD to give school fees to vulnerable children to get access to secondary school. So this, it is like taking one stone and kill 2 birds. First of all, it is in the sense of marketing, and even it is creating goodwill to bank. So I would say that the SDGs brings profit. For example, when it comes to, there is one SDG where this bank partner with BRD to construct homes for public workers. So this brings long run profitability. So come back to the last part. Yeah, the second part is specifically the SDG that help the company to get more profit for me. And I think that it is this one of building homes. Yeah, thank you. First of all, they are trying to make companies assets more, because they are like resources. So that's all.
Can I please make an addition on what he said? Oh, thank you. Thank you.
Thank you. We are now inviting Team B from University of Rwanda.
Good afternoon once again. So we initiate sales recommendation for 12-month target price of 39.58 London francs. So we want to show you something about the valuation of current position. So in case of 20 million US dollar extended by Entrepreneurial Development Bank to I&M Bank, the average rate of $1 in 2022 was 1,036 London francs, but on 20 February 2024, $1 was 1,275. We found that interest expense to be paid will increase for 23.09%, and the total repayment over 5 years as maturity of loan will increase by 19.25%. Thank you.
Thank you. Thank you for your presentation. We want you guys to reflect on your journey of the exercise you've just completed. And we want you to tell us what do you think will be the ideal process of valuing a company. So what you could normally call financial analysis framework, from what you do first, what you do next, what you do in the answer process, or how you should have gone about valuing I&M.
Thank you. First of all, we use free cash flow. First, we create free cash flow for projection. We take into account analysis for historical performance. So we did sensitive analysis of position, and we compare to other competitors in industry. We looked about the regulatory environment of banking sector in Rwanda, and we take the key performance measure of banks, metrics of bank. We compare it to the other competitors, and as I said, we did sensitive analysis, so that will help us to revert our answers. I hope so. If I get the question well.
What do you think will be first steps you do if you're analyst, you're approaching an evaluation exercise like the one you did?
Yes.
What do you do first as a team? What do you do next? And then later till you guys report, and then what do you also do after you report and your recommendation?
The first thing we did, we analyze and we read about historical position of bank. That is our first thing we did. We looked about the previous performance of bank and of bank. Secondly, we used our current position and of situation in country. We combined, we used the multiple variation. We looked at the competitors surrounding the bank. So we did a free cash flow for bank, projecting how income will be, how all expense will be. At the next stage, we chose the model we are going to use. That is where we come up with residual income and dividend discounted model. And at that model, that is where we reached our price.
So what you're doing, I would call it maybe you pitching, and then you also recommending what to do. Let's say investors. What do you think will be your next steps once you've done that? What comes next?
Once we've done our evaluation,
Once you've done recommending, what did you recommend? So you recommended this.
we recommend the same.
What comes next?
After sale,
Yeah, you as analysts who have done the work.
Yes.
What do you do next?
it's to share information. I think so. If we reach our conclusion, it's to share information. But
Thank you. By supporting my colleague, I would like to say what we can do next after having that sale recommendation is continue to keep eyes on the information that we got in order to see the quality and availability of another information that can be coming as supporting the model that we chose.
I have a very straightforward question, and I expect a straightforward answer. From your assessment, okay? What were, if you compare I&M to other banks, what were like 3 weaknesses of I&M Bank compared to the rest, to the universe of banks you compared I&M Bank to? Straightforward answers, please.
The first weakness that I&M Bank has compared to another bank, we can see is a strategy. As we have seen in last presentation, we have seen that it targeted a border where it is a risk zone, where due to political issues, some branch can close, and that's why we can say their strategies that are being used by I&M can make it weak compared to their competitors.
Thank you so much. I would like to add something on that. The 3 weakness of the I&M Bank. First is targeting urban only without going outside of the urban. Secondly is cost of income. As we said before, they are having capital, excess capital, that can be very hard to manage them, and this can cause a risk where they provide dividend to shareholders which their capital are not working. Again, last one is cost of food. Thank you.
The last thing I can add on is what we call cost to income ratio. We found that it is the one who used the high amount of income generated. Almost 60% are used to cover expense, which is above other major competitors.
Okay, I can say you used the free cash flow for equity evaluation model. What is the conclusion from this evaluation, and why the FCFE only? Why didn't you use other methods so that you can compare the result from other method with that of FCFE and then base your conclusion on the result from various methods?
As I told you, we didn't use it. It was like example of a method that we used. I say we used free cash flow to help us to analyze the price success and to forecast what to expect to have in the future. Doesn't mean it's only the method we use to evaluate and to forecast our futures. So that is why I told you we use multiple variation. We tried many methods.
Then if you use the other methods, which we did not see in your presentation, what is the position of I&M compared to its peers or to the industry?
So we didn't include everything in the presentation because it was short. We must be conscious, but we found that I&M Bank in total asset, it's in number 4 in total asset compared to major peers. We have we have the 4 major banks, which is I&M Bank, Bank of Kigali, Equity, and Popular Bank, BPL. That is 4 major bank in Rwanda. So we compared with them with I&M Bank. I don't know if you remember that in our evaluation, we showed that how the key metrics, price to earning ratio, price to book value ratio, we showed it here on the front.
Thank you. Can you please tell us challenges, just a few, that you've encountered when you were collecting data from I&M or elsewhere, and then how you managed them, those challenges? Just quickly.
On my side, the first challenge we meet, it's inadequate information, inadequate data. There is something we wish to know, but are not disclosed in annual report. So that has become a big challenge for us. We prefer to use available information. Update from third quarter 2023.
Thank you for your responses and congratulations for getting to this stage of the research competition. My question will be on ESG, and the first one is, it's in two parts. The first one, what is the link between ESG and value creation? And the second one, which initiative from your assessment of I&M generated the most value for I&M in the year you reviewed, or the most recent year?
The first question about ESG is in the creation of value to the customer. We saw that there is the customer relationship, managing customer relationship. They are responsible. Stakeholders have a platform to say their wish, what is not going well. That is, we help to create value creation by knowing what they need, what customers need. That relationship between bank, that increased relationship between bank and customer, which will help them to create value for them. The second question was
which ESG initiative of I&M
created the most value? So,
in your own perspective?
In my own perspective, the supporting Rwanda Automobile Block, it's the company which provides reading material for children from 3 to 12 years. It's good because it helps kids to grow up to increase literacy, storytelling environment. I think that is one of most.
Thank you, University of Rwanda, Team B. Yeah, we have the last one, which is Kepra, Team B. Kepra, Team B. We are having two team having letter B, but one is from University of Rwanda, another one is from your university, Kepra College. This one is Kepra Team B.
Yes, thank you very much. Here, apart from Team C, Team F, and we're about to continue with some of the further questions which were not clarified. So starting with the assets of the bank, from 2020 to 2022, the assets have been growing by 5%, and when you look at the GDP of the country, it is under 5%, which means it is growing at a normal rate. Now, as we move forward with the valuation part, we use the method of discount dividend model. It's the one I'm going to focus more, and we went with the discount capitalization model. So we got a cost of equity of 36.2%, which was arised from the continuous annual growth rate of the dividends of 29.35% and the risk rate of return of 5.4%. We got the risk of rate return using the rate of return from the 10-year bond of the government, which is 11.8%, minus the inflation rate, which was 6.4%, to arrive at a value of 5.4% of risk rate of return. Now, as I move again to the liquidity coverage ratio, comparing it to the industry, using the information from National Bank of Rwanda, the liquidity coverage ratio of the whole bank as of the whole industry as of December 2022 is 215%, compared to I&M Bank, which is under 42%, which means it is only above 42%, above the minimum, which is 100%. So I would like also to welcome my teammates to continue with some of the further questions which were asked.
Coming to the part of the management and the board of directors, the 9 members in the board of directors and 13 members in the management team. And for the chairman of the board of directors, it's Bonaventure Nibizi. And judging the management team, we found that they have worked together to contribute to the climate change, which is tree plantation, which reduces the emissions from different industries. So
time up.
Sorry guys, but thank you for the presentation. Quickly, we want you guys to reflect on what you've done throughout this research and tell us what you think would have been the ideal process to follow the research. What step should you have taken first? What's the process and the step you should have taken from the point you approach this assignment until the end?
Thank you very much. The procedure that we have passed until currently is really good, but passing through it and starting to know about the CFA challenge was the first part, like to know what is the CFA challenge about, how to participate it, and then the next step would be like how we're going to make the team members, how approaching one depending on their capabilities, different capabilities, so as to make a thing which is tangible for competitivity. So the next step was like to get mentors, they can know about the mentors and to become familiar with the competition, and then we make a research. So up to here, that's a stage that would be followed.
I was more interested in the analysis part of it, some kind of framework you usually follow to make an analysis. What do you do first, second, third? What's the steps, what's the process of approaching an exercise like this one?
Yeah, so in terms of the steps, the first part was collecting all the data from the publicly available information. Because in order to do analysis, we had to input all the data in the Excel sheet, because we can't just look at the numbers and see if there was a change or not increase. Then after putting in them into the Excel, we tried to look at how has it been changing, depending of course on the years we have chosen. If it is maybe from 2022 to 2018, 2020 to 2022, for our case, we used 2020 to 2022. Then from there on, after analyzing the percentages changed, we can look up if there is any abnormalities in the data we have collected. Like for instance, the example I gave on the part of other operating income, we had seen that there was a percentage change of 217%, but normally that is very, very high. So we go back into the report, we look what caused this change, and then we found that there are people who are defaulted on their loans, they paid back. So there, it changed a bit up the numbers. So if we don't look up the overall or that small change in the financial statement, we might assume that the company actually made a lot of big profits from its income, while it was not. Then after doing all of that, then we forecast into the future. For our case, we chose 5 years, so 2024 to 2027. That's what we did the forecasting from. I believe those are more of the steps we approached.
So and you recommend it, right? So what do you think comes next once you've done what's this process, where as analysts you've recommended? What do you do next? Is there any other steps next that someone should be following up?
Let me continue. After all of this, of course, you have to come up with a recommendation. Like, for instance, maybe talking from a personal story, like I had bought some shares from I&M, and then like last year they normally distribute them like around in June and July. So after doing an analysis, in terms of like diversifying the portfolio, we have to change where we are investing, or maybe where we are taking ownership in which companies. So after the research, we have to be like, are we going to buy more of the shares? Are we going to sell this? So from my group, we've decided that we are giving a recommendation of selling because other banks are giving much better opportunities than I&M. Like maybe, for instance, talking of the Bank of Kigali, looking at last year, they gave out a dividend of 32.9 Rwandan francs, which is like around the dividend yield of 11%. But if you look at I&M, it was 1.84 Rwandan francs, dividend yield of 4%. So BK was leading more than 3 times in terms of dividend yields. So from that report and analysis, that's where we got the conclusion to give some recommendations. Thank you very much. Don't know if I answered fully the question. Okay.
Thank you. I'll just ask a general question around what was your experience around data collection, if you encountered any challenges, and then how you managed them.
Thank you for raising the question. Personally, on my part, when you look at collecting all the data, there are some models we could have used to better get at an interesting value, but then we're not able because it's required to collect a lot of data points. Like for instance, if we have used the capital asset pricing model, we could have used the beta. But in order to find that beta, we had to collect at least 60 data points from the previous years or days where the market price has been changing. So in terms of getting all of that data, it was kind of frustrating. And when we relate to BK, when you go online, you can find that they are publicly available. You can just download all the data for 1 year, and then your analysis becomes easier for you. So maybe I can also give the floor to my fellow teammates to add on for the challenges that I made.
Yeah, of course, the challenges we made, it's all about collecting data. Maybe, for example, you are on my part, yeah, what I presented. Yeah, about like calculating the market shares. It's not like publicly available, it's not easy. We have just used the net profit of banks throughout the year from 2022 to 2022 to manipulate data for ourselves. So it will be better like if there is a website that make that analysis and you go there and find information easily.
To add up to what on my team said and how we overcame those challenges, as he mentioned previously, there was information overload. There was a lot of information to analyze and everything. But thanks to our mentors and then to our team collaboration, the mentors gave us a guide on what to follow and how to analyze all the information we have. And we also use we're all an expert in different areas of this competition, so we contributed each other's skills to come up with the final, and we did as much as we can to present like this work. Thank you.
Okay.
The last thing I can say is when it comes to data, some of the information that regards the environment and the social part of the bank, some of the information were not released by the bank officially. You'd find other articles are talking about the information that were from the bank. So I would recommend that most of the information is officially released by the bank. Thank you.
Can see you used the dividend discount model to make And with that model, you issued a sales recommendation. Is there any other model you used to get the same conclusion? So it could be better to have used a different model so that you can compare their result instead of basing the conclusion on only one model. Is there any other model you used?
Currently, we use only 3 models. It's where I had went to the matrix we used in order to weigh the different, the cost of the targeted price that we could get. Majorly, we had the dividend discount model, price to book value ratio, and price to earnings ratio. And those 2 ones, price to book value, price to earnings ratio, mainly was in order so that we can compare it to the other banks. Yes, so with the price per earnings ratio, looking at it, I was giving an example that if you invest in 7.1 Rwandan francs in I&M, it is going to earn 1 Rwandan francs. But with, even though there is the logo there for BPR, we meant KCB because they merged and they kept the logo. So for there, if you invest in 2.99 Rwandan francs, you still generate that 1 profit. So you invest less, but you still generate the same profit. Now going to the price to book value, if you look at it at 0.92, it's a good price. It means that it is undervalued. But generally, though it is undervalued, we couldn't really recommend a buy option because compared to other banks, with the exception of equity, which is also still an uncertainty because it recently merged with Cogebanque, we're still recommending a sell option because even though it is undervalued, compared to the other banks, it's still even more undervalued. So other banks are giving even much better options. Then lastly, we combined all of those 3 prices following this weight, the discount dividend amount with the 60% weight and the price per earnings and price per book value of 20%, where we came about the final value of 500 francs with a downside of 20%. Yes.
Last question. So from this exercise, what is your general outlook about I&M? What is your outlook? How do you see the bank performing? If you take into consideration all the criteria that you assessed.
All right, so taking everything into consideration, I'll first start with the income statement. Majorly, after COVID, the profit increased from 5 billion to around 9 billion. So it is going up front. It's trying to make changes and also increase. And also looking at the dividend payout ratio, which was initially 40%, looking forward also to increasing about 40% in the incoming years. You could say they're looking more into giving more dividends back to their investors. But then when you compare it to relative other banks, they're still offering better options. So from my perspective, it is growing, but as an investor who wants to gain something back for the money that maybe I bought shares in terms of dividends, I will go like for other banks. It's financially performing well, but compared to the other banks, if I invested in it, I will get less than if I invested in other banks. Maybe I can also give the floor to my colleagues to add on.
And to just add on a little, and also when you look at their ESG and the contribution they're doing to the environment and to the customers also, this could also help with the value they are creating for their customers. Like for example, when they're contributing to the environment, it's like with this climate change crisis that we're facing, this will add value to the customers and like how they're contributing through planting trees. And also the different services they are giving to their customers, like the short-term loans, fast short-term loans, and then the different insurance policies they are giving to industries. I feel like this could contribute to their value proposition and creating value, which could lead to the growth of the company. Though they faced the fraud issue a while back, but I feel like they're recovering from it. And with the improved security measures they're taking, I feel like there's a growth in the future for I&M Bank.
As addition, when looking to some action of I&M Bank.
I'm going to jump into the last question. And for this one, just one person. It's on ESG. So there are three criteria that have been selected on determining your value, rather on the technical side, determining your valuation report. So I have two questions on them. The first one is, how does ESG link to value creation? The second one is, which initiative, in your view, generated the most value for I&M in the field of ESG?
Yeah, thank you. I can start saying how these ACGs are creating value to I&M. So once they are try to help the government or UN to plant trees and other social things, they are giving trust and good reputation to the public. So the people are coming to them because they trust in them. This is the already added value to them because they are earning the indirect profit from the action they are doing in SDGs. Oh, okay. Maybe you can remind me the second one. Focusing on the SDGs? Yeah. Okay, that's social, of course, because if they are helping the community to get one step from one floor to another floor, they are the one, the customers, the public is the one of their customers. So if they are helping them, they're getting the reputation from them. So that matters too much than other SDGs elements.
Thank you. Thank you. You can go back to your seats. Yes, I'm seeing people doing this. Can we all, I can see some people are innovative. Thank you, everyone. I believe we are coming to the final section of our day. And we are coming to the scoring part. Our judges are going to talk to our team and they confer and they'll come and give you a word or two. But in the meantime, all the teams have been splitting and making claims about a bank called I&M, which accepted to be the subject bank, subject company. Some of them, maybe the bank learned one or two things. Some of them, maybe the bank wants to say, no, how can you rate us as a sale when we believe we are going far? So, but nonetheless, everyone had their reasons and they were valid. Allow me to invite I&M Bank, being the subject bank, to give a word or two and some remarks, and then we move on to the next step. Thank you, I&M, and the floor is yours. Few minutes. Thank you.
Thank you. Thank you, everyone. My name is Derek Mujisha. I am here representing I&M, and mine is just a note of thanks to the CFA East African Society and other partners included, the judges, industry mentors, and most especially the participants. I really like to see talent displayed like it was today, and the future is bright for you. At I&M, we value this. We value feedback. We value being split apart and researched upon. And I think this is the second time we've been a subject company, and we appreciate all the inputs and recommendations that were given. I took a note of some. The other thing is we commend you for the work, and we want to let you know that we are interested in talent like yours. Make sure that you put that on your CV once you apply at I&M. Yeah? Yeah, why not? Why not? I think we value someone who has a lot of recommendations and things that they can share with the bank, what the bank can do much better. Your addition to the to what the bank is doing is highly appreciated. So yeah. And the other thing I wanted to just point to is the data, how that was. I think the question continued coming up, and I would like to let you know that next time we are available to have more time. We only had one session, I think, but we are available to have more time with you and explain more of the data that you get. Maybe on the website, we can even give you raw data. That is just subject to saying what you need, but I think we are open to sharing that with you so that you can make more informed decisions about us, because I think we are supposed to be a buy and not a sell recommendation. But not to go into what the judges will do and what they're going to do right now. I just wish you all the best, and may the best team win. Thank you.
Thank you, I&M. I was hoping you would, offer some internships and no, he didn't say it, but I'm sure they are thinking about it. What we do is we keep a database of all the students that have taken part, and you never know what could come up. They could ask us, please give us a database, and we give them some aptitudes or internships. So, and many things are coming right after here, and even way after, because we started a partnership with these universities and all of you as individuals. So next up, allow me to are we good? Okay, hold on. Allow me to invite the main sponsor of this function, Kigali International Financial Center, to have their remarks. And I believe, they need no introduction, but allow me to welcome Madame Hortense. She'll say everything about KIFC and how we partner.
All right. Thank you so much. Afternoon, everyone. How are you all feeling? Come on, guys. You're all winners. Afternoon. Okay, I think it's time for lunch. I should make this very quick. But thank you so much, Gilbert. By way of introduction, my name is Hortense Mudenge, Chief Strategy with actually Rwanda Finance Limited. But we represent the Kigali International Financial Center. So for us, it's really a word of thank you, or a thank you note. Number one, for our key partners, including the CFA Society and the chapter here in Rwanda. I also want to extend really heartfelt thanks to the judges, all key CFA charter, I would say, and charter to be holders. But most of all to you, really, for participating in this research challenge. As Rwanda Finance, we're really looking to see how to promote the CFA qualification in Rwanda, because we're not going to become a financial hub without having really specialized skill sets. So it's really good to see that you're taking this up. I would encourage you to also take on the CFA qualification. And I think I don't want to keep you really away from your lunch. I stand in between the awards and lunch, so thank you so much. If you have any questions or comments, reach out to me or my colleague Anita, and we were very happy to be here. Thank you.
Thank you very much. That is Rwanda Finance Limited. They are looking for, I think, 500 CFA charter holders in the next 5 years. I don't know whether you guys have already thought about taking CFA, but the industry is crying for that skill that you've already showcased. As I invite a representative from the judges team, Madame Isa Irame, to give us her remarks and tell us who takes the day. Yeah, so thank you very much, Rwanda Finance Limited. And there are other things coming. Yep, thank you, Isa.
Thank you, everyone. I wish to congratulate all of you. It's not been easy because all of you did put in the work. But however, like in any competition, not everyone can win. But I hope that everyone can learn from the presentations that you've seen from your colleagues, from the questions that we've asked, and also the remarks that you've received. So at the end of the day, you will leave today better informed, I hope, better equipped, I am sure, for the next steps. Some of you are graduating soon, some of you have already maybe graduated, and I really want to congratulate you because I know and I remember that from my university days, it takes a lot of courage to go into these type of competitions because it requires you not only to work hard, but also put in more hours than the others that are not doing this. So I'm sure it will pay. I&M said you put that on the CV. I would advise that you put it on all your CVs and every time that you are applying, because then it shows that you are a committed student and you want to learn more. So I really want to congratulate you from that perspective. In terms of what we've seen, is that some of the teams put in more work in understanding not only the company that is I&M, and I also want to thank I&M for that, in opening their doors, being able to be critiqued by so many people being able to issue a recommendation. So I really want to commend the company for offering their time, but also all those people who have participated. So the work that you've put in paid, because we could see that some of the teams understood very well the content, and not one person driving, but rather the full team. People responding to questions all together, and that is extremely important, because you don't want to have a team of 4 or of 3, and then you only have one person who is driving. Then it means that some of the people either didn't work or don't understand. Another thing is that when you're looking at I&M, you're looking at it in an ecosystem. So it was important for us to be able to see that you understand the sector in which this company is operating, but also the economy. So it was very useful to see the way you analyzed the information. And I'm going to start announcing, but I'm going to do it like in Miss Rwanda. I'll start from the back, so that it's very exciting, okay? So, number 3 is number 3 is Kepler Team D with 52. Congratulations still. Number 2 is, then you'll know what is number 1 also. So number 2, number 2 is you are Team B. So you are Team B, 58.8, and then the winner, Kepler Team B, 73.4. Congratulations, and thank you very much.
Thank you, everyone. Please, winning team, come forward. We have a lot for you. Yes. I want to believe this was fair enough that it was stiff and it was a game of inches, so congratulations. Yes. Madame Hortense, if you don't mind, please come. Yes. Yeah. Yeah. So it's 500 USD awarded to the winning team. They have a team trophy called Rwanda chapter, winning university, and each of the participants will get a personal plaque and Again, each of the participants will get a certificate, and yep. Okay. So I think next we have certificates. Do we have certificates for? Yeah. You can see everything comes when you work hard. We would like to invite the faculty advisor for this team to come in front, please. And industry mentor, please come in front and take a photo for recognition. Yes, thank you very much, Kepler, for taking the trophy. And many other things are coming. Yep, I'd like to, give you a moment, photo op, and then you can go back to your seats, and then we look at the next steps. Yeah, thank you so much. Please. Everyone who has participated in this competition has a certificate of participation. So I and them, once they come to you for a job, you will ask them, do you have the participation certificate? Did you rate me by? Okay, one final bit as we close. We have a presentation, 1 minute presentation from Finaco Hub as a co-sponsor. I'm here to present and also receive on behalf of Mr. Andre Ndikumana. He has won the award of Industry Mentor of the winning team. So this is for him. Closing remarks. The winning team is going to be contacted for the next steps. You're going to the next round of competition, which is Europe, Middle East, and Africa, EMEA. It's going to be really, really, really stiff. They're going to compete against all the African universities and even the Middle East and even Europe. So it's going to be more interesting. Anyway, moving on to Finaco. I have a short presentation on behalf of Finaco. It's a tuition provider. It offers, if you look at the back, it offers CFA, SCCA, and CPA. They've co-sponsored this event, and they have offered tuition sponsorship free for the winning team. You can feel free to choose between CFA and CPA and SCCA. For the first year, you'll have free tuition, and please contact us at the end of this, and we will have a discussion of more details. And with that, we come to the close of this function. I don't want to come between you and lunch. Please, feel free to stay behind to network. I have taken note of all the people who are, coming out and showcasing their skills. We have your database, and we'll get in touch with you to see how you can further your career and improve your skills in being analysts. Like I said, the investment industry, banks, fund managers, and insurers, and every other person that is in the investment industry, the pension funds, and some of the leaders are part of us, but we won't mention names. So they are looking at you. I believe from my experience in these such challenges, the people who pick people's interest, they are usually contacted and they get jobs and they further their career. So I encourage everyone to be more interested in investment analysis and finance, and contribute to the investment ecosystem. With that, I would like to give a very big round of applause to the judges. You've done a good job, and I believe you've taken a lot of time out of your busy schedules to come and interact with these budding stars of the next generation. So I thank you. We are open for lunch, and winning team, please stay behind. We have a chat with you. Thank you very much. See you next year. Yes. Thank you. I've been corrected. We would need a group photo. If you don't mind, come in front and we just take a quick photo, then we head out for lunch.